tokens and coins. If you're not holding your Bitcoin in self-storage, it's not Bitcoin, man.
100% correct.
Nothing has changed, obviously, in Bitcoin. What
different hope that drive up there with punch?
Let's say hello. No,
This guy's favorite orange pill.
all good points. Sure, we don't. Well, yeah, actually, Puncher, are you going to be able to code most of today?
100%
different tokens. And if you're not holding your Bitcoin in self-storage, it's not Bitcoin.
Prices determine the value of that.
The center is the greatest gay man on the planet. Proof of power, real power.
Yep, true. Hey, Mr. Hodl, you want to say hello? Sure, we don't. Hey, G-Money, how's it going?
Shadalay, motherfuckers.
Bitcoin.
Proof of that drive up there with punch.
correct.
Let's say hello. Bitcoin.
Different tokens and coins. Different tokens. And
Sure, we don't.
Correct.
Good morning. Can you guys hear me okay now?
See, everybody in my family is.
I get in arguments.
Bitcoin.
This is Bitcoin today. Not yesterday. This is Bitcoin today. Not Bitcoin. Bitcoin today. This is Bitcoin now. Turn up, though. Get that education going. This is Bitcoin now.
Don't look now, but Bitcoin is on fire. This thing is, you can't kill it.
You have to find something that you can trust in that trustless world, which is Bitcoin. You know,
what's up, Eric Rice? How are you today?
Good morning, fellas. How are you doing?
Wonderful. Terrence?
How's it going, Lauren?
Great. Punch?
We were just talking about you.
Of course.
Good, buddy.
Was the reference with nutsack?
Yes, it was in reference to the nut sacks that Jennifer gave us.
Thank you, Jennifer. Shout out. I see her in the crowd.
Yep, she
Speaking
is.
of nutsacks, if I cough any harder, I'm going to blow a nutsack. This cough is awful.
Oh, man, that keeps relapsing?
I've had it for a month. My wife cracked 2 ribs from her coughing. Crazy.
She literally cracked a rib. No.
She literally cracked a rib. One in the front, one in the back.
It's like getting married to a woman who is never going to.
Exactly, Gary.
All right, so we've covered nutsacks and broken ribs. This is a good start to Bitcoin today thus far. I appreciate y'all being here today. Lauren, Terrence, Puncher, Don, Chuddle. Man, sometimes I think, man, it's really hard to come up with new Bitcoin news every day and economic news, but it's really not. It actually is a very simple market. There is so much stuff that's happening right now. We're going to run through some of the news that's happening in Bitcoin right now, which really depends on your point of view. Okay, so we have different points of view, and different points of view are good. That's what makes America great. However, we have different points of view that are drastically different. We have like MSTR only guys. We have self-custody guys. We have ETF guys. We have let the banks do whatever they want guys. This is a space dedicated, and I think every single host or co-host or probably most of the speakers here advocate for self-custody. And I think that is the most useful thing you can possibly have with Bitcoin, because there's no point in having a gun and getting a picture of it. You need the gun. It's a weapon. It's a financial weapon to be used in this market. And opportunities like we're seeing today in this space are really advantageous. I hope just for my own sake, but for everyone's sake, I hope my thesis is correct. Where you own some metals for a long time, they rise, Bitcoin remains dormant. While that happens, eventually that money gets taken as profits and moved into something else, which is better in general in almost every category, and it comes into Bitcoin later. I think these dormant flat prices are absolutely a blessing. But Terrence, Lauren, we have a lot of stuff going on in Bitcoin in the last 24 hours. Actually, a couple hours ago, I just saw a post about a watch company that has now made a watch that you can mine Bitcoin with. I don't know if that's actually real. I can't imagine there's very much hash power in a watch, but what a cool way to integrate it. We now have water heaters for your home that mine Bitcoin. Bitcoin mining is becoming a very big industry in many capacities. And the best part is you don't need to have $1 trillion to get into it. You can get into it in your house. You can do it on your wrist, apparently. You can do it with the water in your home. And you can add and contribute to a network's hash rate, which just took a huge hit, by the way. We went from 1.12 zeta hash down to about 690. 1.2 zeta down to 690 exahash. That is a drastic drop. So there's two components to that, because I'm sure that the fudders out there will love to FUD this. The Bitcoin network is failing. It's environmentally bad. Whatever nonsense they come up with. By the way, yesterday I saw an interview of some purple-haired dude pretending to be a woman that actually came out and basically did the 2015 FUD about how it's so bad for the environment. By the way, just a quick reminder for anyone out there, about 62.5% of all energy used to mine Bitcoin comes from renewable or captured energy that literally is wasted constantly. It is the most energy efficient system in the world, and I hope it uses more electricity over time, because not only does it use efficient energy sources that no one else is, it's actually balancing the power grids. So while you guys are out there in some of these areas, and I pray that you're safe out there, by the way, in this cold. This is definitely not the storm of the century, by the way. This is not the storm of a lifetime. This is just a winter storm that's been pretty bad in some areas, like in Tennessee and Kentucky. There's two different separate sheets of ice. But the real reason the hash rate is down is two reasons. There was a difficulty adjustment that went downward. And at the same time, this winter storm forced a lot of miners to actually shut down their computers. So you will hear the word capitulation out there, but it has nothing to do with capitulation. It just has to do with common sense and the weather. Can't get out to your locations when it's freezing cold. When this weather changes, I would expect a massive 30 or 40% jump in hash rate within days of it happening. And that's just how the Bitcoin network works. It is an organic system. It is a living being designed and created, owned and operated by a bunch of decentralized plebs and some corporations around the world that's working for the freedom of all humanity. So a few things to hop into here, guys. I want to kick off discussion with everyone. We'll say hi to everyone first, and then I've got some topics I want to discuss. And then once we get through those and economic news, then we'll hop into whatever you guys want. But I am going to do a hard stop here at 1 o'clock today, so that at 1 o'clock Central. So that is, it's quite some time away. It's 2.5 hours away. We've got that kind of time to free flow and freestyle, but I have to get to work at 1:15. I got some stuff to do for the business. So have until then. So Terrence, Lauren, how are you this morning? Let's go around the horn and just say hi to everybody before we kick everything off.
I'm fabulous. Terrence?
Lauren, I'm fabulous too. Puncher, by the way, real quick, you just reminded me with
There's Puncher.
your cracked rib. He's up here on stage. I'm talking to him.
I see him.
Yeah, the Vardy girls let me know this morning that JSX now flies straight between Santa Monica and Scottsdale, and it's like a $200 flight. Nope, Dom, it's
Dom
true.
saying no. I
Well,
love how far to eat cheese. Go
we'll
ahead.
get to him. He doesn't know. His thumbs are so fat. He's hitting
It's
the
at
wrong
the end of the
emoji.
month. We
You
did a
mean
tour. We did a tour with the fire engines end of the month, but like
Oh, you shut them down? You
No,
shut
the
them
fire
down, didn't
engines
you?
actually make that route back and forth.
they're shut down.
Texas to Santa Monica.
Wait, you're
Shut them
saying the
down.
flights to Santa Monica and Scottsdale aren't available between the two?
No, I think they're going to be available just now. So your info is correct.
Okay,
Your
yeah. Don't give me the
thesis,
thumbs
your
down.
thesis is
What
Yeah,
the
correct.
hell are
that
your
threw us
thumbs
off.
I was
down,
putting the
Dom?
thumbs down because I was hoping that you
Yeah.
fly to some other cooler spots other than Vegas and Scottsdale. Scottsdale's
No, Scottsdale is a great area. I just came from there with Puncher and the Vardy
He means
twins and
cool.
lots of
Physically
people.
cooler.
He
Yeah.
no, he
It's very
doesn't
hot
know.
there.
You know what?
It's
No,
hot.
Dom. He's been.
Scottsdale's hot.
He's inhaling something over there at the fire station.
So wait, $200 out of Scottsdale Airport
Yeah,
to?
you can fly direct from Scottsdale, so you don't have to drive all the way down to Phoenix and straight over to Santa Monica. So you're right
Oh
by me,
wow!
and vice
Nice.
versa. So now I'm coming over weekly to those meetups, or actually bi-weekly, which is the same as semi-monthly, to those Scottsdale meetings.
That's awesome. Well, your presence has really increased membership. You get a celebrity in town, and that's what happens. They're getting all kinds of requests to join the Scottsdale meetup. So thank you.
I would
Well,
think
they just like
Terrence
seeing how
would
much
want to
wine you
drive
can
it.
pound while talking.
I don't get out much.
Let me rephrase that. Puncher's not allowed to get out much.
That's
better said.
If I'm not watching the History Channel by 8:30 at night, there's a problem.
Dom, what's going on, my friend? You naysayer of flights.
Nothing. Just chilling. About to get on a flight going to El Salvador for the 6th time, and that's about it.
Nice, man.
What's in El Salvador? Bitcoin?
Yeah, Plan B. I got a couple cool panels. I got a geopolitical panel with who is it? Patrick Witt from the White House, Safadine, and then I got another Treasury panel with Jack Maulers and Adam Back. Should be a couple cool panels, and I'm definitely, Terrence, you got to hit me with some, like, I don't like a boring, redundant panel. I want to dig in to like make people a little bit uncomfortable.
Hey, Dom,
Bitcoin.
speaking of uncomfortable, can you hit up Patrick J. Witt? Tell him Kevin Kelly was respectfully asking what's going on with the Samurai case.
I will do, for sure. I'll definitely maybe I can weave it into the discussion.
Nice, Dom. Yeah, Dom's a celebrity. We all know that over here, but
Yeah,
not everyone else knows that.
E-list.
Tell him I said hi too. Patrick's a really nice guy and a super smart dude.
Absolutely. Dom, that sounds amazing, man. That sounds like a very cool. Let's finish going around and saying hello. We got Chodl up here. How are you, my friend?
Hey guys, good morning. Yeah, Eric, riffing a little bit on your hash rate and energy usage. I just pulled up my chart that I took out a few decades, and it's really amazing. We're floating around exahash and zettahash right now, but 2040s we should be in the decillion range, which is like 10 to the 33 power of hashes per second. 20
Sounds amazing, man.
2067 we're going to be in the sextillion, which is 10 to the 51. And then at the turn of the next century, we should be at, I can't even pronounce this word. I mean, it sounds like a Lauren word, but quattrovigintillion or something, 10 to the 75th. So,
sounds amazing, man.
Yeah, talking
It's the
energy
nerdiest
use.
thing I've heard all morning.
Talking energy use, man. This is one of the most fascinating topics in almost in all of science right now, because they don't even have numbers that, like, short number descript. What's the word? Like, they haven't like mapped it out that far. They've only gone out non-alien with Quetta. So it'll be interesting to see if Bitcoin actually leads the way for numbering into super huge numbers.
Yeah, I mean, when you're looking at turn of the century hash rate, it is next level. You have to look at turn of the century. You look at projections for 5 to 8 years, and that computing power number is absolutely astronomical. And you're seeing it'll become more economical to do that, because if campaign promises come to life and energy prices do get significantly cheaper, you're going to see a lot more people entering into the space to start mining. So that is actually the metric that I look at. I didn't look at it this morning, but Chodl, you said where are we at right now? We're at 900 exahash again.
I've got us at 920 exahash for at the
Wow.
moment. Yeah.
So we went up 300 exahash overnight.
Yeah, this plays out into the thesis that Maryland has built over through time about energy costs coming down, and it really is fascinating, because I think you're hitting the nail on the head, and I think that Bitcoin is a leader in that ability for mankind to radically reduce our energy costs and make it more abundant.
Sounds amazing, man.
Yeah.
I completely agree. That we have this opportunity for education that comes out. And again, that interview was hilarious to me, to watch this purple-haired weirdo talk about 2015 talking points. But it is absolutely one of those revolutions that people don't get. And I always say that when I hear about utility, there is no greater utility than supporting a currency that actually increases energy efficiency and ultimately over time lowers energy prices. That absolutely is a real world integration that doesn't get talked about enough. But we're going to continue to say hi, and I'm going to move on to a different point. Prescott, how are you this morning?
Hey, good. Good morning. Got two things for you. First up, I'm going to jump off this call in about 15 minutes. I was just picked as one of the 20 finalists for the Replit Race to Revenue competition for an app I'm building. So pretty excited about that.
Congrats.
Thank you. Yeah. And then the second thing, I did a little AI experiment, which I think Fred will appreciate since he's in here now. This AI experiment that I ran this morning, I said, what is the word of the day? And I was very pleased that in a Bitcoin space, it brought up a couple interesting ones. Claude AI said the word of the day is petrichor, which is a distinctive earthy smell you get when rain falls on dry ground after a long spell. We could all use a little rain to sprinkle on our Bitcoin and bring it back up. Then the ChatGPT word of the day is fiduciary, relating to trust or position of trust, where one party must act in another's best interest. And then Google Gemini's word of the day is quiddity, which is the inherent nature or essence of someone or something, which makes a thing what it is. So I leave you guys with that this morning.
I appreciate the useless information there, Prescott. I will certainly
right?
use it somewhere in my life.
Try to find a trend. It's just a reminder that AIs do not think the same. They're all completely different when you ask them for information.
No, we've now been word salad brainwashed by AI this morning. Thanks, Prescott. Appreciate that. That's awesome. No, congratulations on that, man. Best of luck to you in the final 25 here for your app. That's amazing. Love hearing that stuff.
Thank you. Yeah, I had to take leave off today so that, I can be away from the day job for a moment.
Well, I mean, are you sad that you have to step away from working for the government to go work for yourself for a while?
No, I need to build this because if the government's going to shut down, I got to earn my own money on the side, right?
There you go. Your government shutdown. There's a conversation that never ends.
Yeah, it might happen in 3 days. We'll see. I
probably
have an
will, and
ethics
no one will
waiver for that
notice.
reason. Yeah,
No
right.
one will
Is that
notice.
still the anticipated outcome, government shutdown?
80%.
Yeah, well, that's the current information on the street is because of the ICE conflict in Minneapolis. It's apparently going to get held up, unfortunately, at least just over that one incident.
Wait, what am I missing? I thought we were already in a government shutdown.
No, we're in a corrupt government.
We have a failing
operating.
government, Terrence. We have to continue to fund them to
right.
fail. So they need more failure money.
Yeah. Got it.
Well, doesn't it seem like that Trump is removing the head of ICE and they might be pulling back? So that might be
He's removing the Border Patrol, the head of the Border Patrol, not the head of ICE.
Oh, okay. My mistake.
Yeah. Not an easy mistake. They're both not doing very good jobs anyway. So I call it the way it is. 290 deportations is nowhere near at this juncture in time. Obama, 420. We got to look at numbers. We got to hold people accountable for their job. If they were in the private sector, they'd be fired, but we'll cheer them on because our guy was in the office. Let's say hi to Aftermath. How are you, my friend? I know there's going to be a pause. There's always a pause before he speaks, so I'm going to fill the gap.
GM, guys.
ITM.
Good morning.
Eric,
can you guys hear me okay now?
You're a joy. You're a joy, but Terrence, you're the man.
Totally.
Hey, go get him, Preston. And the word of the day here is hodl.
Hodl.
Love it. Love it. Fred Krueger, what's going on, my friend?
Not much. I was just a couple things I was noodling around with. One is I was looking at market cap of silver relative to Bitcoin, and everybody's just focused on this last 4 months. But the market cap of silver relative to the market cap of Bitcoin was 100x in 2015, was 10x in 2017, was 1x 4 months ago, and now it's gone to 3x. So I think that's a really good way of kind of zooming out and looking at kind of how Bitcoin's done versus silver. I think just in a couple sentences, you really see that there really is. And the other thing about silver is, the other thing I sort of realized is, if you look at in constant dollars, silver hit about $200 in 1979, and then it crashed to about $5, but that would have been equivalent to about $20 in today's dollars. Then it hit about $50 again, crashed to about $30, and now we're hitting a little over $100 again in constant dollars. So I think, the big picture, the way to think about silver is, silver has basically kept up with inflation with 3 big bubbles. And Bitcoin is obviously something completely different than that. It's this power law. The bubbles are much, much smaller. But yeah, I think that the numbers don't look good for silver. And I think that I made a prediction today that I think Bitcoin will exceed again the market cap of silver this year. So that's my prediction.
Well, considering silver lost the entire market cap of Bitcoin in something like 38 minutes, I think that's probably a prediction that I would pay attention to. And more importantly, I think the way to think of metals is they're just catching up to Bitcoin. Like the acceleration of Bitcoin over the last 17 years has been astronomical, but gold and silver have been dragging their feet for years and years and years. It's just a catch-up mechanism. I think in the end,
Well,
you'll see the. Hold on a second. Hold on a second, Fred. Hold on, Fred. MySpace, Fred.
Go ahead.
Just joking, buddy. I think in the end that what we'll see is a parity, because my friend G Money is up here, and I think that he would refer to precious metals as Bitcoin for LinkedIn people. And eventually the LinkedIn brains are going to realize that Bitcoin is a better form of money, but that's not going to happen right away. And I think we'll see some parity for a while in those two markets. That's just my opinion. Go ahead, Fred.
Yeah, I forgot what I was going to say, but yeah, you're basically right. I just think that the narrative, there's all kinds of new narrative now that AI runs on gold and silver, because gold and silver are used in the wires that are used in data centers. Like, there's all this kind of crazy stuff that is completely nonsensical about silver being a form of money. It's just not. And I think it's in a bubble personally, and I think it's going to crash.
You can think that. Like, I love different opinions. I don't think it is. I think that gold and silver still have a run ahead of them before they normalize. But if anyone's saying that, that is nonsensical, Fred, because the play to gold and silver from a guy who is involved in the off-grid data center space, from my understanding, AI and then quantum chips will actually require about 10 to 15%. Sorry, I got a phone call. The chips themselves do require not a significant, because they're little tiny chips, but 10 to 15% of the metals used in chips for AI and quantum do require gold and silver. So there will be this extended new use case for precious metals in data centers, but by no means would I ever listen to anyone saying that a physical commodity will be used as money in a digital environment. That is, unless it's tokenized. And then if it is tokenized, then that becomes a trust factor. Do you really believe that the people who are holding the gold and tokenizing it are being accurate? So there's a lot of risk in that. So I agree with you there, Fred. I think it's nonsensical to think that gold and silver will be the money for that. It's weird. G Money, what's up, brother?
Shade delay, my friends. Shade delay. Yeah, no, look, gold and silver are for the boomers. And if you're celebrating the rise of gold and silver, you're celebrating the rise in the balance sheets of central bankers. That's nothing to celebrate, right? We don't want them to in strengthen their positions. We want them to burn up as the fractional reserve gangsters need to do. And so, I mean, I think it's great that Tether is doing what it's doing and making a bunch of money and backing it with some gold and Bitcoin. But precious metals project no power, guys. Remember, this isn't about gay man on the this planet. Is about Proof power. Anyways, just chilling, seeing what's going on. Real power.
Yep, true.
Unless you're killing werewolves and vampires, silver has no power projection capabilities.
And coins. If you're not holding your Bitcoin,
it's not vampires though, G Money. It's werewolves. Silver will kill werewolves, not vampires. Vampires are killed by a stake to the heart and can be fended off by the cross itself, or holy water will burn them. But it's the werewolves you have to worry about with the silver. So there will be.
I thought it was silver too.
No, silver
with the vampires.
Silver's for the werewolf, man. So like, you just have your silver, melt it down, turn it into a 308, and you can fend yourself away from. That's utility, true utility, G Money.
I think that's what Puncher's waiting for. Actually, Puncher's waiting for the werewolves to come attack his vault. So
you heard him cough. Puncher may be the werewolf. He's coughing. Him and his wife are breaking ribs right now, coughing. He may be converting around midnight every night, and you have no idea. That's just how Puncher rolls. That's how he rolls, my friend. Leonidas, what's going on?
Hey guys, I trailed in yesterday when Gary and Green were chatting a little bit about the adoption of Bitcoin, and I think Gary was using a little bit of grok and just saying that we're a long ways away from maybe this thing picking up steam. I was curious, as the metals discussion was happening yesterday. Maybe you guys will dive into this a little more, but I was looking at last year when gold was pumping throughout the year, I was thinking, all right, the wind's out of sail for at least a Bitcoin run. And I'm wondering, similar to gold bugs from a decade ago who had to wait, a full 10, 12 years for prices to materialize. I'm just wondering if you guys think the folks that have come in, at that 68,000 price of Bitcoin are going to sit around twiddling their thumbs for another decade, or if you guys think Bitcoin's claim to fame and pushing aside gold and silver and these other metals as the LinkedIn crowd, as G Money says, will come sooner, or if you think actually we're too early. I think everyone thinks in 2017 that by 2019, Bitcoin was at 100K. In 2020, we thought we'd be at 200K. Maybe every cycle, everyone's thinking things are going to move quicker. And I'm just wondering if this Bitcoin adoption rate and process takes 10 to 15 years versus the next 5. It would be interesting to have that discussion in this space.
Every time we have a sideways market or a bear, and we're not even remotely close to a bear, like these are the questions. Everyone thinks, "Oh my God, this is going to take 4, 5, 6, 10 years," and it's like, no, it's like 6 months to a year and a half, like at max, and we're so beyond that. We're going to be skyrocketing this year. I'll hand it over to Fred because Fred actually does the math on this.
Yeah, so one thing I'd like to point out is that Bitcoin adoption, actually number of users coming into the Bitcoin ecosystem, is only growing at about 15% per year. But that's totally normal. That's totally great. Right? So Gary in his space had this statement. He was like, well, I was at this Bitcoin meetup a year ago, 2 years ago, and then, again, 2 months ago. And it was the same group of people. And, that's what you would expect, because actually Bitcoin, you would expect 70% of the people to be the old comers and, 30% being the newcomers. That's just the math of how fast the adoption works. So the adoption is actually slow. It's slower, right? It's sort of it doubles every 6 years, sort of. But the price doubles a lot faster than that because the price is kind of going quadratically. So it's doubling every 2 years, on average. So that it is a very sort of, and by the way, if you look at kind of AI, in particular, like kind of Android growth and stuff like that, that's also a power law, and it seems like it's a power law with a power 4, as was cars at the beginning of the 20th century. So if you look at the beginning of the 20th century, there was like 8,000 cars. Then by 2010, there was like 500,000 cars. Then by 2020, there was 10 million cars, right? So this was also a power law. So I do think we're in a power law of adoption on Bitcoin. It's deceptively slow, right? It looks slow. It's very easy to kind of fool yourself to saying we need to do something before it gets adopted, but it's not getting adopted at doubling every year. That's just not the way it's working. It's adopting at 15% a year, but the price can go much, much faster than that. So I think that this is all consistent with the power law, and I do think Bitcoin could triple this year.
Yeah, I think great data. Like I love hearing history and historical mathematical breakdowns. Thank you, Fred, for that. Another simple way to look at this is the fact that our market cap, relatively speaking, is small in the global scale. So if you have a player that puts, I don't know, $100 million into Bitcoin, it's going to make the price move relatively quickly if it's not OTC. And even OTC will have an impact. But the reality is that I just, having been in Bitcoin this long, I just feel like Bitcoin has this reputation of, since it moved so quickly in the first 10 years, that will always be the case. And it's simply not. As an asset matures, you're going to have a slower climb up. You're also going to have a slower decline, and you're going to have more flat periods. Now, you can look at where we are for the flat stagnation in the price and look at contextually what's happening in the world. So the meteoric rise of gold is definitely a signal of dollar debasement. Silver is a different story. I agree with that. But dollar debasement is happening. We have severe economic problems where our lower and middle class don't have the free-flowing capital that they had at one point because things cost more money. So as things unfold and unwind, I think that you just got to be patient with Bitcoin. It's the ultimate test of conviction. It's no different than anything else that all of us face in our life. You're convicted on something, whatever it may be, and it doesn't happen right away. You either bail or you continue on. And I think that in this market right now, I just try to look at things very simply. To buy 1 ounce of gold cost $5,000 US. To buy one Bitcoin cost $87,000 US. That is a tremendous number. And it wasn't that long ago that Bitcoin was in the $2,000 range. If you zoom out, it really wasn't that long ago. So it's just going to test your conviction, your fortitude, your patience, and things that test your patience, like children, are a huge payoff, because that's where the actual grind pays off. So just think of it that way. The price action itself, I think there's a lot of things that are happening right now. There are more banks adopting it. I'm not a fan of this, by the way, but it is news we should share. There are more banks, applying for either allowing trading, which can help us, by the way, or custody, which will also help us as self-custody Bitcoiners.
Now, Eric,
Hold on a second, Fred. Hold on a second, Fred. I want to get your opinion on this in a second. The other thing I'd like guys to talk about is this new income-bearing BlackRock fund, and it kind of coincides with, like, first of all, let me put this out there. I think BlackRock is the enemy of humanity. You can think of it any way you like. Great asset manager from that perspective. I think that they own way too much and have too many proxy votes, but that's the political issue. From a financial issue, we have the largest fund manager in the world, who is now pretty much, as far as I can see, using sailors' tactics to harvest the volatility and provide income back to investors. So they're copycatting Sailor, which is a huge compliment. And at the same time, this new reader, which is kind of hilarious that we're interviewing a BlackRock executive to be the new Fed chairman. But I just saw a post where in 2020, he actually was quoted on camera or on the record saying that he believes at some point in the future, Bitcoin would be the global reserve currency, along with Tucker Carlson posing that question to Peter Schiff in an interview. So I want to get your feedback on that, Fred.
Well, as far as the BlackRock candidate, I think it's hugely positive, and I just want to remind everybody that the single biggest impact of anything in the macro world is interest rates, and I feel like it's very likely that we're going to get very low interest rates starting in May and for the rest of the next couple of years. I really think we are going into and Joe Carlosali will immediately attack me and saying it's not going to, you can't print the 10-year note. But I will say, I listened to this guy, and what he says literally is, we're going to lower interest rates, and yeah, the yield curve is going to steepen a little bit, but the 10-year will adjust, and it's going to adjust down. And as a former bond trader, I can tell you, it just starts at the 5-year. The 5-year is going to, the 2-year is going to first move, then the 5-year is going to go down, and then people are going to grab for a yield, and they're going to grab in the 10-year. And this is also super bullish for all these income products, right? And I think it's if you just look out a year, we're going to be in a low yield environment, right? We're going to, the Fed is, you want to say it's the end of Fed independence. And Mark Moss had a really good post there where he said, I'm against the Fed, but if there has to be one, I'd rather it not be independent. And I'm kind of leaning towards Mark's view of this. Last thing I just want to point out, completely independent, is I posted to the Nest. I'm really a believer that Bitcoin happens in log's time frame. And Stephen Perrinode posted this fascinating chart, which is the first candle chart of Bitcoin in log terms. And so he looks at it at sort of, even fractions of log years. And it's amazing. And you look at it in that way, and we had 5 green candles, a tiny red candle, a huge green candle, and a sort of medium-sized red candle. But look at this thing in log terms, and there's no debate. There's no debate. This is a log process.
Small cap, go ahead.
Hey, good morning, fellas.
Morning.
Yeah, look, I think this is every day is a good day. Every day is a great day to accumulate Bitcoin. Every incremental crack in the system, in the fiat system, whether it's inflation, debt rollover, political intervention, because that's really what fiat is, right? It's a legal privilege to intervene. It just reinforces why Bitcoin exists in the first place. And over long time frames, I think that independence that it has compounds. So obviously what's interesting right now is metals, like you said, Eric, they're finally waking up, right? Gold and silver have really spent the better part of the last 15, 17 years lagging Bitcoin, and starting to see that catch up trade. Silver especially has, both the monetary and industrial demand tailwinds behind it. And I'm not bearish at all on these metals. Like gold and silver are real assets. They've survived every monetary regime change in history, and they're going to continue to do that no matter what. And they're going to just continue to matter. But where the distinction lies is just velocity and adoption. So metals, particularly throughout history, move with cycles. And I think Bitcoin moves with networks. So you can have silver and gold reprice higher and still have Bitcoin outcompete over the long arc, because it's just tapping into a much larger addressable market, which is basically the digital settlement and computing collateral down the line. Which brings me to my next point. We're entering the digitization of humanity, the digitization era of society at every single layer. When it comes to, if you think about it, communication, compute, identity, AI, commerce, and the truth is that the physical world just can't keep up with the velocity of the digital world. And some of my favorite founders of some equity companies that I'm invested in, they've talked about that, and they've been, they started their companies. Some of these Bitcoin miners specifically, like they started their company in 2018, building data centers for Bitcoin mining with the idea that, not sure exactly when, but eventually we're going to need high performance computing data centers. So, and what's the reason for that? Again, the real world can't keep up with the digital world. Settlement, capital formation, value transfer, they're all stuck in legacy rails that were built for a much slower economy, not the economy that we have today. And you just can't scale with the speed of software, or with that speed of software. So Bitcoin is, I think it's just the monetary layer that plugs into the digital stack, right? Settles globally, permissionless, final, doesn't rely on a Fed chair or a committee or board of directors to decide what the money is worth. And as the digital world compounds, it needs a financial layer. It needs a financial primitive, and Bitcoin is without a doubt the most credible version of that. It's monetary physics for a internet scale economy that is growing at the velocity, the speed of light. So metals, they're going to continue to matter. They've been monetary assets for thousands of years, but they're assets of the physical world. And I think physical settlement just moves slower by design. The digital world is exponential curves. We're seeing it. We're seeing all these CEOs and big entrepreneurs talk about it at Davos, right? That exponential curve, and it needs money that moves at the same tempo. So when you ask yourself, or when people ask why accumulate Bitcoin, it's not just like a macro hedge or a fiat escape hatch. It's because the future economy is digital as well. Not that it's not about a macro hedge or a fiat escape hatch. It definitely is, but the future economy is digital, and you want to own the asset that settles natively in that domain. So zoomed out, it's not about dunking on metals or cheering price action, right? It's about escaping like a broken system and setting yourself up for the future of humanity, which is this digitization and picking assets that store time more effectively. And so, today 87,000. I think it's a pretty good day to do that with Bitcoin. Although we got to keep in mind that this is going to be a crazy volatile year. The next 4 or 5 months, it's very geopolitically driven and news headline driven. I don't think that a lot, but again, at the same time, none of that has to do with structural components or fundamentals of Bitcoin. So it's a good day, and it's a good day to be here on this
That was the
stage.
longest good morning.
Totally.
Hey, good morning.
Well, yes,
Sorry about
small
that.
cap. You and I are speaking the same language. I think I said that yesterday. I think it's just obvious that the world is going digital, and in that transition period, which will take some time, physical assets will have a place because we're transitioning from physical to technocratic, which is overly digital. Like everything will be digital. So spot on with that small cap. I think that's brilliant. Before I go to Thomas, I want to pose one idea. If we end up in this low rate environment, which I think all of us, first of all, words are said by politicians and by bureaucrats all the time that never come true. But I think we're in an environment where that is a more than likely probability, if not almost a surety in the next few months. But imagine what happens to adoption and to price when loans become cheaper personal loans. And then you start seeing people pulling, a $50,000 2% loan from a bank to buy Bitcoin with it. I think that opens up brand new avenues for price and adoption, because one of the issues that Americans have right now is they don't have enough free flowing capital to buy something like Bitcoin. And I think that's an area we don't really discuss that much, but I think it's a gigantic opportunity, along with, the 3 to 4 years or 5 or 6 years down the road, the wealth transfer from the boomers to the next generation. Thomas, go ahead.
It's interesting the last month, last 60 days, there's people seem to have lost track of the idea that truth matters in the long term, and investors should be concerned about the long term and truth. But in the short term, truth takes a back seat to crowd psychology, and that's where traders really flourish, right? They're able to tap into crowd psychology and to front run the crowd. But it doesn't connote truth, meaning that just because something's going to rise up for the next 30, 60 days, that could be a crowd psychology thing, and it's temporal. I mean, it's not going to last. I think this silver rise is crazy. It's just interesting, but I don't view it as a monetary asset at all. I don't think there's really any monetary demand that sets the price. It's just on the edge. This is an industrial squeeze. It's temporary. It'll go up and then it'll reset, and who knows where it settles down to? Probably higher than it was, but lower than it is. But that is a very different approach to thinking about. When we think about Bitcoin, and the longest time we've been talking about this, we're thinking about truth and long-term thesis. You cannot think about it in terms of what happens in 1 week, 30 days, or even 90 days. That is the wrong approach to it. And I agree with Fred that we're going to move into a low interest environment. And I'd be interested in what people have to say about this issue. I think when we move into a low interest environment, assets explode. And classic yield instruments like bonds that pay a coupon at and let's say it's linked to these low rates or lower structured rates, you'll have duration risk that'll put up some, but it will all fall short of asset-backed loans that pay a yield. Like, so Fred's launched a product. You can do other things. Other people are doing things where I take a rapidly approaching or appreciating asset and I borrow against it. I can generate a 10% yield. And MicroStrategy or Strategy is doing that. And then Fred again set up that fund to do a similar thing. How does 10% compare to, say, 3%? I think you're going to start to see people look at very different strategies for creating yield. Yeah, I think we're in a wild world here.
Yeah, I think one of the things that people don't realize is that Bitcoin really can have any utility other than just sitting in cold storage. And I think we are going to see a world where Bitcoin can be borrowed against, can be used in things like I'm doing, but other, there are plenty of other things. The BlackRock thing is a Bitcoin, covered call sort of yield max type strategy. But I definitely feel like the idea of Bitcoin and income are now going to be, they're going to go together. And I think that's going to be a killer combination in a 2% interest rate environment.
So, Fred, think of this idea that all these classical assets, whether it be real estate, gold, even stocks to a large extent, they are assets from an analog world. And when we move into a digital world, they're not all fit for purpose. I mean, like, I'd probably say stocks probably have the best applicability in a digital world, but certainly real estate and gold do not. They're anachronisms, right? You can only own real estate and gold at the consent of the state. I mean, I'm talking about at scale. I'm not talking about having 5 coins from grandma. So if you're going to have it at scale, you have to have it at the consent of the state. Whereas Bitcoin is frictionless in that sense. So when we talk about asset-backed loans and yield products, what makes it attractive is the fact that collectively the universe is looking to Bitcoin as an appreciating store of value, and that will grow over time. But it's, in terms of foreclosure on a failed loan, it's somewhat frictionless. It's a smart contract. Whereas if I have to foreclose on real estate, Well, it depends on what jurisdiction you're in. That could be a nosebleed, and that gets priced into the loan. Same's true with other assets. If I'm going to do a loan on gold, there is some friction there. And so I just think when you get into an AI dominated world, a digital world, you put yourself in the shoes of the AI. What asset are you going to look at? You're not going to look at, certainly not going to look at gold. Now, that doesn't mean the crowd psychology in the first quarter of 2026 isn't going to rush to gold in a store of value fire. If that happens, that's where most people are going to go. That's just the crowd. That doesn't make it true, because truth is going to, what matters by say, like, pick a time frame, 2030. If you had to make a bet today and you had to hold it till 2030, would you bet on gold? Would you bet on Nvidia? How about silver versus Bitcoin? I don't think most of us Bitcoiners think it's even a close call. And so I just think we're in for some wild times. I'm very interested to see how this whole Fed thing plays out and whether Trump's going to get his way with a Fed chair bringing the interest rates down. And I just, it's interesting. My daughter's a senior in business school at Rutgers, and she just texted me, Dad, my teacher's asking me about whether the Fed should lower the interest rates. Actually, the professor asked if they should raise interest rates. I was like, well, I don't think the professor understands what's going on right now. But anyway, she has to talk about Fed policy, the pros and cons, and it's fascinating to hear have the conversation with my 21-year-old daughter. Her awareness is far much greater than I would have thought. It's not completely understood, but it's fun to have those conversations about the pros and cons of it. But I think we're going to go to a post-World War II process where we're going to monetize that debt and lower the interest rate and look at it from Trump's perspective. He's not thinking about whether this makes sense from a long-term perspective of 2030, 2035. We have to survive the next few years, and the interest on the debt is a problem. It's too much of the budget, and they have to roll quite a bit of debt that's going to raise the effective cost of borrowing even more. So if they don't lower rates, it's going to be a problem. Now, managing the long end, that's a different issue, but you're going to have to solve that interest rate issue.
Yeah, that's a great way to put it there, Thomas. And kudos to you for raising a good kid that can see that. And there's a reason why this economics professor is a professor and not actually an economist, asking if we should be raising interest rates at this point in time. Very, very good thesis there. Let's.
By the way, there was a really good interview with the this new Fed chair candidate, and I'll shut up, where he talks about he basically says, interest rates have a much smaller impact on inflation than people think. And he's like, they tried to raise interest rates to 5%, did nothing, really, and I just think whether this is true or not, he's going to be arguing for a deliberately lower interest rate policy that's sort of independent of any measure of inflation. And I just think we're going into a new world of, if he's the guy, and I think he is the guy, I think we're going into a new world of basically something like we were, from 2008 until 2018, that entire decade of zero interest rates. And I think we're going to go back there.
Fred, do you think that's overall a good thing or bad thing? And can you walk us through his thesis of how interest rates don't impact inflation?
So his thesis is the main thing it provides is housing, right? He's thinking that it will actually just really help housing and make houses more affordable, right? And so, and I agree, and sort of Grant's made that point too. Affordability, everybody talks about affordability, and what is the biggest thing about affordability? It's house prices, right? Houses are not affordable. So I think that, that's where their thinking is. How do I make house prices affordable without completely tanking the housing market, which would also not be good.
Contrast a lowering interest rate with Japan's rising interest rates and a compression of the spreads. And I know you spent time in Japan, but think about that collapse of the arbitrage that drove many aspects of the carry trade, and how that moves capital flows and changes leverage in the system.
Yeah, I mean, for a very long time, Japan always had lower interest rates than us, and they had an accelerating currency too, right? That was it's not the case that low interest rates always are inflationary, and it's not the case that they always correspond to a falling dollar either. You know what I mean? So I think we could have a stronger dollar with low interest rates and high activity, and I think given kind of the promise of AI, we want low interest rates so we can fund more of these AI things. I think it's very important. I think it's structurally important to have low interest rates right now. So I would be all in favor of Trump's new candidate.
But let's also break this down mechanically. So we have lower interest rates, which certainly will make housing more affordable. And during that process, we have more people buying houses using at least 80% debt. So we have more people going deeper into debt, though the debt is cheaper. But where does the money from the housing come from? Wouldn't that be printed money to produce the loans? So that certainly has to impact inflation.
Well, no, it just means that the payments on the houses, right? Houses aren't bought based on the price of the real estate. They're bought on the size of the payments, right? So, if you can get a house for lower payments, which you will if interest rates fall, what does that mean? That means people are going to buy more houses. That's it. It means there's going to be more affordability on the housing
but Fred,
side.
you're not answering my question. My question is from a logistical standpoint. That statement that he's making is that lower interest rates don't impact inflation cannot possibly be true. You could window code it and say in this sector it won't cause inflation, but the money for these new mortgages comes from somewhere, and it has to be printed by someone. And inflation, by definition, is the inflation of the monetary supply. So, I'm just trying. I'm not confronting you. I'm just thinking logistically.
No, but look, here's kind of, I think. I am not, one of these economists. Look, I think most of these economists are wrong anyways, but the ones who I think are closest to being right, they say that if you give people stimulus checks, that will 100% generate inflation, right? And that's kind of what we saw over COVID. You're just handing people money. What do they do with it? They go spend it. They go buy, they remodel the house. They go out to they just blow it, right? But if people are going to be spending a third of their income on, housing, they're just going to get more house if interest rates are lower, right? Because they can afford more.
On the flip side, the stimulus check would give people money to spend into an economy that would benefit small and mid-sized businesses, internet businesses, even large corporations. They would be buying goods and services within an economy. That would stimulate GDP growth and the economy itself. Whereas if you're printing money and it's going into houses, you're actually extracting that type of wealth from being spent into companies and organizations around the country, and banks are collecting interest checks. You see the quandary in the statement?
Yeah, no, but here's the thing. People are going to be spending the same percentage of their net income on housing. All right. In fact, they've been spending an increasing amount, right? So if you look at, how much does an average house cost right now versus how much does it cost as years of salary, right? I think we're getting to something like 15 years of salary, and it was, 7 in 2000 right?
Correct.
So, so we're spending more and more of our disposable income on housing. Right now, we're kind of almost plateaued. We can't go up, right? You can't have houses cost more than the average house cannot cost more than 15 times the average salary. That just doesn't work, right? But so I think people are maxed out on payments, and the question is, are they going to be able to get more houses, or are they going to be able to get entry level houses? And so yeah, that's what I think. So I think he's not wrong. I think he's also in favor of all these kind of, he literally says balance sheet games or something like this. So who knows what he's thinking, right? He's BlackRock. So he's thinking, I think the idea of actually doing, all these Bitcoin bonds and everything else could really come back. And he's pro Bitcoin. So I don't know. I just think that we're in a completely different regime in 100 days.
Yeah.
100 days is different. We're in a different regime. And maybe sooner if he gets announced next week, then the people are already going to start building that into the expectations. I think that's incredibly bullish for Bitcoin, personally.
No, I do too, Fred. I'm just like, I think that oftentimes we just get statements and we're like, oh, I agree with that without thinking it through. So I try to think through things and pose a different perspective, because we do have BlackRock, who, at least on an executive order, is no longer allowed to buy single family homes, which means that they have a massive inventory of single family homes that if they lower interest rates, more people will be able to purchase, and the more people who purchase them, the more expensive houses become, because you have a seller's market where buyers are running rampant. The fact of the matter is, financially, when you're looking at it from the government perspective, it's a Mexican standoff that no one can win. And I think that any move, this system is in a absolute quandary. I don't think there's any way of fixing it ever. But, I agree with you, Fred. I think it'll stimulate certain areas of growth. And more importantly, low interest rates aren't just good for housing. They're good for personal loans, for people buying cars. It'll stimulate those industries. But in the knock-on effects that come from it, I think should never be ignored, because you'll see more people indebted. So you're getting deeper into debt. You'll have more things, but you'll also carry more debt at a lower rate. I'm not saying it is a good thing or bad thing. I'm just pointing out the obvious and logical, that in the end, lower interest rates create a better lending environment, which creates a better profitability scale for banks in general. And it will provide a lot of personal sovereignty and freedom. And I would personally rather see, at some juncture in time, lower interest rates for people to get money to buy Bitcoin instead of houses, because I think in the long run that is a better play. But that's a small part of society that even thinks that way. 98% of people just want a house, and you're totally correct there.
Eric, I also think there needs to be you should talk to people in the housing business. There's over 1 million single family houses short relative to what the country needs, and real estate's extremely regional. And I think a lot of the price issues and lack of affordability, while interest rates play into some of it, it is a supply issue. It's a supply squeeze. So, like where I am in New Jersey, a single family home, if you list a single family home for $700,000, which is a nice home, it's not a McMansion, but it's also not a starter ranch. That $700,000 house will have 20 bids in 48 hours, and will go for over $800,000. So what ends up happening is the people who are young people are trying to buy it, they qualify for a certain mortgage level. But what they end up doing, it's really, even if they could qualify for more, they end up getting into bidding wars with people who are going to pay cash. And so if we're going to solve this housing issue, lowering interest rates is part of it. But I think we need to look at the subsidization of mortgage-backed securities, which is a slippery slope given what happened in 2008.
Very.
And I think we need to create incentives for builders to build more inventory and supply so that people can buy. Like when you look at what happened after World War II with the GI Bill, and again, I'm not suggesting this. I'm just simply saying this is what happened, and we should make considerations along the line. But a lot of these tract houses and cookie cutter homes that allowed people to buy GIs coming out of the World War II, they were able to then go buy a starter home. I grew up in Maryland in one of those starter homes. It was small. When I go back and look at it, I'm like, well, this is like a shoebox, right? But it was a home that we lived in. And, my parents, who were at that time, probably lower income, lower middle income, in today's market, someone in their shoes could not buy a house. They just couldn't do it. They couldn't compete. And so at some level, you have to address this and not just the lowering of the interest rates, but if you don't address mortgage underwriting through subsidization of mortgage-backed securities, changing some of the underwriting rules, different packages, and address the supply issue, then I don't think you're going to resolve this housing issue that so many young people, that's probably one of the top things on their mind.
Yeah, no, Thomas, I don't disagree. And the area that I will disagree with is this: we're 1 million houses short. So we disagree and say that most of the government data we're getting is a lie, but we buy that one. Why are we at a 1 million home deficit? There could be many reasons behind it. Is it a fact that we don't have enough physical houses, or is it an effect that right now, like I have a tremendous profit on my house, tremendous, but I also have a 2.25 mortgage. I'm not moving until there's another 2.25 mortgage for me to get into. And I think that opens up the door. It won't be new housing. It'll just be available housing for people to move, because we have quite a few empty homes around this country as well. So just one of those things to think through and think about. But, going back to your point about your original home, when I went back to my hometown for the first time in probably, I don't know, 20 years, I remember as a kid, I was like, man, we had it so good. I think, everybody said we didn't, but it felt like we had everything good. I went back and saw it, and I was the same thing. I was like, how in the hell did I live here? This is crazy to see, like what you see as a child, and then later on in life go back and look at it. But yeah, I mean, the house,
Eric,
is the housing
it also
issue real, or is it manufactured? You got to remember, the guy who's in charge of housing is one of the largest mortgage lenders in the world, Pulte. He does 750,000 mortgages per year. It's going to make his business boom for sure. And we have, I'm not saying that's a good or bad thing, but we certainly will get a lot of data to push things in one direction to sell more homes. Do Americans need more homes? Because I don't think owning a home is the American dream. I think liquidity and freedom is the American dream. That's my opinion. You can buy into that whether you want to or not.
Think of that experience of going back to your hometown and seeing the shoebox that you lived in when you were growing up. I was not unhappy as a child. I did not say, wow, I can't believe I live in this. In fact, I did quite the opposite. I look back on that as a great time. And it also helps people, sort of rationalize what kind of housing do you really want in your life to have that freedom that you just mentioned. The 5,000 square foot McMansion, that's like a mini resort, creates social isolation and creates a lot of, I'll call it financial anchors that make it difficult for you to have flexibility to do certain things. So maybe move here or spend time in a different part of the country, et cetera. So I think there's a multifaceted thing. I don't think there's a single silver bullet here.
I agree.
And
yeah.
when I hear the million, I'm just talking to people in the industry, like people who are in real estate, who sell. But again, it's a very regional issue. While I would say there's a shortage in New Jersey, I don't think there's a shortage in every region of the country. And I just think it depends on where you're at. If you're trying to sell a home in Sarasota, Florida, or Punta Gorda, Florida, those people wouldn't say there's an oversupply. There's a lot of people trying to sell and they can't get a bid, right? Those maybe the prices just have to adjust after going up for so much during the COVID years.
Yeah, I think that's the one thing about national real estate data that always shakes me, is because it's different every 12 blocks. Like everywhere is like I live in a very nice neighborhood. I didn't know I have 4,600 square feet. I didn't know that was almost a McMansion. So good for me. It feels like a tiny house after you live in it for a while. But in this neighborhood here, we have for sale signs that when I moved here, I had to come to this house the day before the open house and give them an offer with a deposit to seal it up before an open house. Otherwise, it would have been gone in an hour. And now some of these houses here, just in my little town, my little neighborhood, some of the one down the street, it's overpriced by about $100,000, but the one down the street has been on the block for probably 11 or 12 months by now, and it's pretty consistent to see them lasting 5 to 6 months. So there certainly needs to be stimulus into the real estate economy, because it's not economical for people to, a lot of people move and then sell. They don't do the sell and then move, and I think that there's a big holdup of cash flow when that happens. So there, certainly something needs to be done, but I want to make sure that when we're bringing up this data, that we're critically thinking about it and challenging that data as often as possible.
So that 4,600 square foot house, or however big anyone's house is, you end up filling it with stuff. And
oh yeah,
you got 4,600 square feet of stuff too. It's not just a big home. And I was talking about this with my wife, because we've been on the road a bit, and like when you're traveling and on vacation, and you're bringing maybe a couple suitcases, maybe just a suitcase and a carry-on, and you're staying in a hotel, and I never would be in that situation. Like I was down in Palm Beach for about a week. I wasn't sitting there saying, I wish I had all my stuff with me. I wasn't even thinking about that. And it's like, you realize all of your possessions, you think about, where does that word come from? Who's possessing who? So I sit here, my house is like over 5,000. I don't know what it is, 55 or something like that. And it's too big. I don't need a house this big. And what I end up doing is I fill it up with shit that I don't need. And I just think that, we're going to see a decluttering, especially as the world goes more digital. You're going to start to see, people change the way that the attitudes. But I do think back to this housing issue, we need to give younger people more hope that they have some agency in the decision that they make about what their living conditions are going to be. Because right now, I don't think people under 30 feel like they have that agency, and it creates a political problem.
Yeah, in the immortal words of Tyler Durden in Fight Club, what you own, and or it was Ed Norton, what you own ends up owning you. I'm very much a minimalist there, Fred, as well. I love to live light and travel light. I think it's a tremendous point here. I want to get G Money's take on this government normie conversation. What's going on in your brain, brother? I'll just say it for you.
He's
Taxes
fielding
are
a
gay.
call from the
We need to spark it up a little, bro.
Here we go. Fred, Mr. Fiat Maxi, like just wants to get rich and then do what? Buy a yacht and have a bunch of strippers on it. Like, where's the power? Where are we going to get our sovereignty back? Like, you guys are all talking like a bunch of fucking normies. Like yesterday was really bad, actually. I don't know who that grain guy was, a San Francisco pooper, but look, there's no like way like this new world is going to be just like status quo. And I think you guys aren't thinking big enough. You guys are still like trapped in this fiat mindset of proof of stake politicians and shitcoiners. And we got to think bigger than that, because nobody's ready for what's really going to happen. And that's going to be the birth of freedom and sovereignty worldwide, like full stop. And, these centers of freedom and sovereignty are going to pop up like in El Salvador and other places. And we need to be thinking about that, because paying our taxes to pedophiles isn't going to work. Okay. And so we finally have a weapon. We finally have a way to project power. And all I keep hearing from you guys is like, how many more fiat cuck bucks are we going to have in our pocket? And that's like not what this is about. So that's what's, I get frustrated. But anyways, love you all.
Well, I think there's a happy middle ground. And I love having the conversation swing from one direction to the other, because until that world exists, the world that we're in needs to be dealt with. And I think that there's a happy balance between, thinking in the old version and then thinking futuristically. So I appreciate both sides of the spectrum there. And I want to get Puncher's opinion on things as well. What's going on, Puncher? Don't cough, just speak. If you can. Aftermath, go ahead. All right, that was great. Thanks, Aftermath, for the reverb of the background noise. That was fantastic. Fred, I certainly want to get your opinion on this, because I love hearing the polar opposite sides of things, because I see Fred's point of view. I see Thomas's point of view. Like, this is the world we have at the moment, and we should prepare for changes that are coming that we don't actually have certainty in what they are, except for the fact that mass digitalization will be a guarantee. And both these guys are Bitcoiners. So, I think there's a happy medium somewhere in the middle there, because if you're not thinking about the world as it exists today and just the future, you're probably missing out on some opportunities to acquire more Bitcoin. That's one way to think of it. And on the other end of the spectrum, you definitely have the right to walk away from the world as it is and just stack Bitcoin. But Fred, I want to get your idea about that balance.
Grain, G Money referenced Grain, who I think he describes as a San Francisco cuck money boomer or whatever.
Pooper. It was a pooper.
Pooper. Okay, that's right. But look, Grain wrote this kind of, the words are not great. He called it Michael Saylor's creating the new central bank of Bitcoin, which I think a lot of us will be like, ooh, that we don't want that, whatever that is, right? But I think that's not accurate. I think what we're talking about is the financialization of Bitcoin. Bitcoin becomes the substrate of the world, right? And we build on Bitcoin. And that's the that's the world I want to be in. I want to be in a world where you can pay your Bitcoin, your mortgage in Bitcoin, where you have a very complex way of borrowing, and you can stack Bitcoin. I want to deal in a world where we have Bitcoin bonds. where the U.S. government says, hey, we have this option, and you can buy our Bitcoin-backed bonds, and
Fred wants to
you know,
pay his taxes to pedophiles.
wait. Who wants to pay taxes? Period. I don't want to pay taxes. Period. And I certainly don't want to pay.
So then so you were given a weapon on not have to paying taxes, but you probably don't hold any. I don't know if you hold any self-custodial Bitcoin. Maybe you just hold the ETFs. But this is the weapon we
I have a
use.
lot of self-custodial Bitcoin.
Oh, okay. Well, that's good.
Yeah.
But that's how we win. When enough of us self-custodial Bitcoin and tell the government to go F themselves, that's when power returns back to the people. Like that's the true fight here. It's not about, how many more cut bucks we can have.
I mean, we are going to have people who custody for other people. That's just the way we're going.
That's unavoidable. I agree.
I just don't think self-custody is going to be completely the solution. I think, you have to have the option certainly to self-custody, but I think most people will not self-custody, and I think most growth will come from custodians like BlackRock. And I don't know. I don't view BlackRock as quite the evil Darth Vader that Eric thinks they are, but yeah, they're just just kind of create financial instruments on some of it will work and some of it won't work, and it's a petri dish, and you need a lot of experimentation. So I'm in favor of all this stuff.
So I think this is a great point in the conversation to point out some obvious things that I've seen lurking around two spaces for quite some time. And I'm more of a lurker than a speaker most of the time. I just tune in for 20 minutes and tune out because I'm usually working. There are two camps that exist, maybe three, but two distinct. There are the self-custody, which I certainly fall on. I mean, like I'm not worth 565 million, $800 million. I'm just, a pleb who's had some success in life, and I want to maintain that. Then you have the, structured products, third-party custody audience. And where these things go wrong and where division comes into play is that you can be accepting of one or the other. What I have found is most of the guys who talk about the structured products, they actually have about half of their wealth in self-custody when you have a private conversation with them, which is great. And then you have the self-custody people that are like me. Like, I think that's the tool, because the way that I view it is, if you want to do structured products, which is building a nuclear reactor, I want to hold the uranium. I don't want to buy the nuclear reactor. I want to own the uranium. I want you to have to purchase my uranium at some point in the future or borrow from me to be able to do that. And that's my perspective. The other side of the coin is that the structured products build adoption, and there should be no doubt about that. So whether it's BlackRock buying on behalf of ETFs, they're still buying Bitcoin from the market. It's good for the self-custody people. It's a delicate balance that goes in between them. And I think where it falls short is the tribalism. It's only this way or only that way, and that's not the truth. It's not the reality of life. Me personally, I'm never going to buy an ETF. I'm never going to put money into MicroStrategy, although I endorse what they're doing. I mean, you probably would be a fool to say that Michael Saylor is in all ways bad for Bitcoin. I think it's certainly a centralization risk, and I never read that article by a grain of salt, but yeah, he is kind of forming a central bank of Bitcoin. There's no way around that. He is centralizing ownership. You can acknowledge that. There's nothing I can do about it. There's no stopping the train that's left the station right now. So I love the conversations about this, but I think at the end of the day, self-custody, I don't care what you do. Like, if you want to buy an ETF, fantastic. You're taking Bitcoin off the market and theoretically raising the value of my self-custody Bitcoin. At the same time, I think it falls short because a lot of people right now look at these conversations like, I'll listen in for 20 minutes and I'll go, I try not to judge people, but if I were to judge people, I'd listen in on a self-custody conversation and say, these guys are bad for adoption because they're telling you to take the most difficult and rewarding route for ownership. And that's all they talk about. It's not, if you listen to the whole space. And the other side, you have the other ones going, these guys are just Wall Streeters trying to claim the money and not holding it in self-custody. There's a delicate balance between all of that stuff, the conversation. These camps that are being formed are ludicrous. It's okay that I don't particularly care for Wall Street at all. It's absolutely fine. Like, it's my opinion. You could say mean things about me all day long. It's not going to do anything to me. It also is logical to say that I don't care who's buying Bitcoin. Bitcoin's for everyone. I don't care. Like, you want to buy it through, you want to have Michael Saylor buy it for you. You want to have, Bank of America own it for you. That's what's happening. And it's okay to also acknowledge that this move to Wall Street is both good and bad. something can be good and bad at the same time. It can be good for adoption rates and for price and ownership, and it can be bad because you're centralizing ownership. Those two things can be true at the same time. And as long as we acknowledge them and people are holding a portion of their Bitcoin in self custody, I think you're doing the right thing. And you got to do what's right for your family at the end of the day. So I see this tribalism all the time. These guys are Wall Street cucks. These guys are self custody psychopaths. Fantastic. That's what makes a market. That's what makes a community. I want to hear those distinct differences, and I certainly want to understand what Wall Street is doing, because if I know what they're doing, like when I see BlackRock announce a new Bitcoin, strategy, I buy more Bitcoin. I don't buy BlackRock's product because I know BlackRock's going to be buying all the rest of the Bitcoin. So the delicate balance. I absolutely fall on G Money's side of the table here, but that doesn't mean that I need to be rude or to ostracize people for thinking differently. We all have to do what we think is right, and I think at the end of the day, I will never stop professing. Even when I was a gold bug, I'd tell people, don't buy gold in these repositories. It's a third party risk. Buy the gold yourself, and buy a piece of land and bury it, or put it in your own safe deposit box, which is a terrible idea because they can confiscate it unless it's a religious artifact. But
And well, I don't mean to be rude. I think we just need to cut through like the fiat corporate political BS, right? Like we don't have to candy coat stuff. We should be able to talk to men as
absolutely,
we
yeah.
want to talk to them. And also like I think Sailor's way bigger than what we're thinking. I think Sailor's building a military cybersecurity sovereign company that nobody sees coming, actually. And that's like, the underground, strategy is actually a military term. And so there's way. I just think there's way bigger things on here that's happening with the technology that we're just not fully addressing to some degree, and so that's why I try to
Oh, I completely
inject some
agree.
chaos into the convos.
Yeah, I don't know what Sailor's doing, and I love hearing your opinion on that. I also love hearing Fred's opinion and other people's opinion on what we don't know what Sailor's doing. Only Sailor knows what Sailor's doing. But it's important to get these different perspectives because it all lends back to the individual sovereign power of Bitcoin, a bearer asset with true scarcity that can be transmitted around the world in the blink of an eye. Like that is the true power of Bitcoin. And I don't care if people use it for a lending product or collateral. That may be its role in the world. We have no idea what the future brings, but I'm in it for the fight. Like that's why I got into Bitcoin, was to be part of this rebellious system of the system. And now the system seems to be the main marketing arm, which is both again, it can be good and bad at the same time. Two things can be true. That can be bad for decentralization of ownership. It can be good for decentralization of ownership because technically BlackRock doesn't own any Bitcoin. They own it on behalf of their clients. So like looking at it from the right lens, I think is always good. And like, gee, I don't care. Like I'm a free speech maximalist, man. Like I don't care what you say. Like, but I'm certainly going to interject my free speech in the middle of that, because at the end of the day, if we're not exercising that right, it does you no good to own anything that's decentralized. Like we have to truly be. And I want to see the Bitcoin community start to build bridges again, because there's no better marketing arm than the actual plebs of Bitcoin. We are the ones who got us here over a 16-year period, not Wall Street. That is the most fascinating thing about Bitcoin to me, is the fact that we have no corporation leader, CEO, marketing team, or marketing budget. It has been advocates with boots on the ground who have put their own money where their mouth is, who have been advocating to other people. And I don't want to see that die, because that is the most organic, honest, and true advocacy for a product. When you start seeing commercials in the Super Bowl, which I think we probably will, for at least a Bitcoin product or something about it, that's people look at that and there's two ways to look at it. Oh, Wall Street's capitulating, or Bitcoin's the Trojan horse. I don't care. I'm going to continue to be on spaces and meeting people in person and talking to them about my story, my testimony of Bitcoin, not Wall Street's, because they do have a different agenda. And if you think that they don't have a different agenda, then you're certainly missing the ball and you are not really seeing history.
Can I interject real quick?
Yeah, go ahead, Beth.
Okay, so you just said it right there. I don't want to hand wave off what Bitcoin is doing. Everyone should self custody. I'm a Bitcoin maxi. I do not want, not your keys, not your coins. When you buy these ETFs, you're literally giving your power to the top of the pyramid. Self custody is the only way to remove that. G Money is absolutely correct. And anybody pushing ETFs or hand waving off self custody, in my opinion, is fake and gay.
Well, so look at it this way. So, could Wall Street be a rug pull? Certainly. So how do we rug pull the rug pull? Like, I don't care. Like, if people want to buy an ETF, fantastic. I want to meet those people and I want to talk to them about self-custody. Buy the ETF and then move it into self-custody.
Well, that's the
We need
problem though. They get it in there and then they don't do the work. Like
that's
literally
an
push the
assumption
work
that
first.
but that's an I completely, first of all, I agree. So I'm not trying to argue a point here. What I'm trying to do is, in probably poorly at this juncture in time, is create a platform where we have to understand at a certain point that we are the representatives of Bitcoin, that we have to understand that there is no CEO, no marketing company. And I think I've heard Gary talk about this quite a bit, and I'm going to go to you next, Gary. Is that our message to the world is definitely confusing, right? I want you to buy Bitcoin. All right, I'm going to buy this ETF. No, that's not the right way to do it. We have to allow people to make their decisions and continue with our education. Because Bad Dog, I'm completely with you. I am a self-custody savage. Like, I in my heart of hearts, if I wanted to be a rude person, I would sit here and condemn people for the choices they make. Unfortunately, I don't do that. And I don't see that there's any use of doing that at all. I think that education and that being patient with people is a tool that is often underused in this society. And I think that grace is something that is never used in this society. And I think that people who are making financial plays in the Wall Street market according to the Bitcoin price action, like they to me become the guy who's like, just took a peek into my bar and I want to walk outside and be like, hey man, come on in and have a drink. I don't want to be like, what are you looking in here for, you Wall Streeter? Give
I
them
don't do that.
that.
I mean, I
No, I
immediately
know you don't.
describe to
I'm
them
not.
that
I'm
that's counterparty risk, and you're handing over your control of your Bitcoin to BlackRock, who has been fucking us in the ass for many, many years.
many decades, yes. And Bad Dog, I'm with you. Like, I don't know if you've followed along long enough. I'm certainly on your team, and I'm certainly not talking to you specifically. I'm trying to say, as a Bitcoin community, that I used to think I'd hear we're confusing people, and I'd be like, well, that's nonsense. So the only way to go is self custody. The more that I see stuff, I pay attention to it, and then I absorb it and think about it for a while, and I come back and I think, there's validity on two things can be true at the same time. That yes, self custody is the only option, but man, I don't want to scare people away either. I want them to get the feel of Bitcoin. But I think that, and I've been talking about this for months now, is that we used to have education to get people to pay attention to Bitcoin. That was the entire purpose. Just look at it. Just look into the asset.
Well, just help them load
And
a wallet and send them some sats, and then boom.
but we can't do that 5 million people a day at a time.
No, you do it with the
That's
people you meet every day that have a willing ear to hear.
1,000% completely agree. But when we're talking about mass adoption at a grand scale, we have to look at our enemy as a catapult. And I absolutely agree. I do not trust BlackRock in any way. Anybody who owns this much of the world and this much political influence should not be trusted. But at the same time, they're creating a marketing engine for them to custody everyone's Bitcoin, and we're not going to compete with that for a period. And I think that the more education we give people in that space, the more grace we give them. Oh, you bought an ETF? That's great. When do you want to sit down and talk about pulling that out of BlackRock's hands and put it in yours? Like, that's the conversation I'm having with people all the time. And they're like, what do you mean? And I'm like, well, actually, you don't own that Bitcoin. Instead of just, ranting on them, that's nonsense. I hate this conversation, but I wanted to bring it up since we're here and the polarization began in this space. Is like, you got to give people a little grace here and give them a little time to understand, because
Well, I have been, but I hate to hear, like, what's his name that was just up here with his large following just hand wave self custody when he's got the ability to start teaching self custody. He's got the fucking listeners, but he doesn't push it.
He does teach self custody. He
Yeah, he
builds
does.
self custody. He's got a lot of products. Here's one way to look at it, Bad Dog, and just know this is coming from someone whose like entire ethos and existence in Bitcoin is self custody. It's literally what I do with clients. Is that when you're trying to teach people about self custody, you're also orange pilling them, because it's impossible to own Bitcoin if you don't hold the private keys. You either have the private keys or you don't, right? Because Bitcoin is just stuck on the time chain. But when you're talking to people and trying to encourage them to do this and how important Bitcoin is for them and for the world, it helps you have a massive vote of confidence when you're able to say in a sentence, look, there are 11 Wall Street ETFs. There are over 220 public companies stacking Bitcoin. Nation states are buying Bitcoin. By the way, none of that is self custody, but it's helpful. So you can teach your family, your friends, everyone in your sphere all about self custody because those are the people you care about. But it's fine, like Eric said, and it's even helpful that everybody else that isn't there yet or doesn't need what you and I need or doesn't see what you and I see get to use it as a tool for them. Yeah, they only get the price appreciation. They don't get the freedom. They don't get the censorship and censorship and confiscation impenetrableness that we get. So it's good and it's good for everybody, and hopefully they'll eventually get here. Remember, I don't know about you, Bad Dog, but when I first came into Bitcoin, I wasn't here. I was here for it as an asset. I wasn't here for it as a whole new monetary system,
Yes,
right? And I was diversifying.
and I
So
agree. And the toxic maxis got me out of shitcoining because of their brutality in reality.
right, but part of why you self custody is because what Bitcoin is worth, whether you want to admit it or not, in fiat terms, and a huge reason why it's worth what it is in fiat terms is what the ETFs and what the media and what everybody else is doing for Bitcoin for those who aren't here like you and I are. So it's just something to think about.
Hey, can I say something really
Go
quick?
ahead, Taylor.
Hey, so yeah, this is actually one of my favorite discussions in Bitcoin because, I even sold my house for Bitcoin, and 100% of my net worth is in cold storage Bitcoin, and but I'm like I've always been super pro Sailor. I'm pro what he's doing. I still am. I don't think he has like massive centralization risk. He doesn't even have like 4% of the Bitcoin. I mean, uh, I think he's a huge net positive for Bitcoin. I think he's out for world domination ultimately, and that he sees Bitcoin as his way of doing that. And I'm like also super pro ETFs. I'll never own one. I have no interest in them at all. But this is maybe kind of one of the least Christ-like attitudes that I have maybe in this respect. But like I have a lot of resentment for the boomers as a generation, and feel like they kind of led us here in a lot of ways. And it wasn't just them, but like I'm great if BlackRock wants to funnel all the boomer wealth into Bitcoin, and the boomers can find out. They've fucked around for decades. They can go ahead and find out, and like that doesn't
That's a
mean as
valid point.
that doesn't mean as individuals that like I'm not totally happy to help anyone or want everyone to like come to self custody and I don't have any animosity really toward any individuals, like, but and I don't really think it's any individual's fault, right? But like as a generation, like go ahead, yeah, yeah. I mean, I don't think young people in mass are out like buying the ETFs as much as self custody, and maybe I'm just wrong in that. But like, I don't think young people have any money to buy anything. And so like that's great. Like freaking like funnel it all to Bitcoin, and then those people can kick the bucket sometime if they don't humble themselves and they continue in their arrogance. And then their kids will sell their ETF shares and they'll self custody Bitcoin because they don't want that crap. And like that's just like that's how the world works. That's how the world's not ossified.
Provided there's no
Uh,
6102 type event.
So this is a good point. 6102 is with gold on the rise. 6102 becomes a major selling point for self custody Bitcoin. 6102. Tell me how the government would seize your
yeah, yeah.
self custody Bitcoin. They'll snatch your
Well,
ETF in a heartbeat.
that's right. The 6102 will be taking Coinbase, which custody BlackRock and Sailor, and so I'm protected from that, but
Bingo.
it's just not my concern. So like my personal concern. So it's more about like I think Eric's saying like we got to just like I mean I definitely believe in giving individuals grace and making sure that people like people it took me free. I mean, I was already a Ron Paul libertarian. We have emails with my friends in 2013 where we all thought Bitcoin was the next world reserve currency, but it still took me 8 years to like figure out like why not shitcoins. I mean, it took me 8 years. And so like, I mean, that's a long time. And I came in with an advantage into Bitcoin in just my ideology and my beliefs already. But it takes time. It takes education, and it's like so people should be given grace in that respect.
Does that make sense to you, Bad Dog?
I give grace all the time, but I also rebuke Christians when they speak false prophecy.
Yeah, absolutely. Absolutely.
Hi, my hands up. Can I speak?
Yeah,
Go
get
ahead,
off the CB
Tullaberry.
there.
Yeah, come on in, good buddy. 10-4.
Yeah, I'm joining on that meeting in like 1 minute. I'll be real quick. So, what I think is the system, this existing system has to continue one way or the other, and the the danger of this system is actually inflation, because for this system to keep going, there has to be liquidity. There has to be continuous money printing, for social services and, the less privileged amongst us. So I think this system is still going to continue, and I think the government has chosen a path as well that they're going to continue on this system. But the danger of this system is inflation, because when you think about it, we don't really need to pay taxes. The reason why we pay taxes is to, bring the money back home and, end that velocity of that money. But I think the government has taken a path, and the path is, to continue on this debt path and try to manage inflation.
Hey,
And I
Eric, is
think
there a closed caption version? I'm sorry. I'm a simple man. I don't understand the words coming out of that user account.
No, he's saying the same thing he talked about yesterday with paying taxes, velocity of money, that
yeah,
taxes
yeah.
actually reduce inflation. But I don't understand what that has to do with
Yeah.
self-custody.
So my point is, you know, um, at some point there has to be a programmable money to control how people spend and when they spend, so as to curb the inflation. And I think self custody is a good idea, but I think it's going to be illegal in the future, because it's going to be put an advantage on some certain class
Be
of people.
ungovernable.
Okay, yeah, yeah. That
And on the last
Tullaberry,
note, I think
hold
I
on a
think
second. Hold on.
ownership of
Stop,
Bitcoin is
stop,
going to
stop
be
stop for a
more like
second,
a black
Tullaberry.
market. Okay.
Okay, fantastic. You believe that at one point in time the world will need programmable money. I don't. So we're going to vehemently disagree with that. On the other hand, I don't even know how to justify. Are you? Do you own Bitcoin, Tullaberry? Like, oh, he's not here anymore. Like, do you actually
He
own
ditched
Bitcoin?
the yeah.
He ran.
Because the idea of outlawing self-custody is the most unenforceable law that has ever existed, is a complete fallacy to say that you're going to make it illegal to self-custody, because they have zero control over the network. I hope they make it illegal to self-custody Bitcoin, because it'll
Eric,
last
it's
about 4
illegal for you
days.
to have that secret. You better not have that secret that you're not telling me
Ooh,
about.
yeah, exactly. Like, it's just that's just a foolish statement to state in here. I want to go to Gary though.
You guys are hurting Dennis Porter's feelings, though. Really, you're hurting
Don't
his
worry, G
feelings.
Money. He'll have an announcement for an announcement tomorrow morning and tell us everything's fine eventually when he comes to the table. Gary, what's going on?
What's up, Big G?
GC. Love it, man. Great commentary. Love it, Gary.
He's busy painting.
Put that paintbrush down and talk to us, brother.
Okay, guys.
There he is.
I'm driving, trying not to hit a tollway or a car. So finding the
That's
fucking
important.
unmute button while I'm trying to respond to Mr. Fred Krueger, the MBA of all things. So I had to stop some things. What's happening, guys? Hey, I'm completely out of my Bitcoin position.
What?
Guys,
No,
I
you are
sold
not,
out. I'm
You
Gary.
are
done.
full of crap.
No, he went full Naka.
He ran.
Full Naka, Gary.
Why do you think the price is doing what it's doing? I'm slamming it every time it's out, even or punctured through it. Does anyone know?
I didn't understand the question. Did you, Eric? He was patchy.
Very patchy.
Did it
Didn't get
punch
it.
through 87?
87. We're at 87,724 right now.
Did it go below 87?
Let me go back to the app.
Thank you, Eric.
No, it did not. We've been at 88, 88.5 to, not below 87 today. Not at all.
Yeah.
So Gary, you're short Bitcoin.
So No, bro. I'm trying to buy it at 87. I'm not short Bitcoin. I own more Bitcoin than people fucking running surveys at a higher price, by the way. So I'm most certainly not out of Bitcoin. I don't even know where these fucking stories come from. It's hilarious to me. Listen, I do believe a man can have a view on the asset he owns and be realistic about it.
Absolutely.
I don't think Bitcoin's gonna like. There's not enough things happening for Bitcoin to go smash through 100 grand tomorrow morning. Okay, and therefore it's weak. And to me, it has a greater chance of seeing 75 than it does 100. And I am simply being realistic and also allowing that to help prepare me to, hey, how do I grab, a shitload more Bitcoin if it's going to do what it looks like it's going to do? So, because I'm adding. See, we should start asking all these brilliant people, bro, how much you adding?
Every day. I
If you're
mine.
short, are you shorting? And if you're not short and you're bullish, are you fucking, buying Bitcoin 10 grand, 100 grand, a million? Or are you just, flapping your lips?
I
And
mine Bitcoin, so it's always coming in.
my man, what's your cost to mine Bitcoin, man?
7.5 cents. And currently I'm offline because of weather.
7.5 cents per kilowatt
Yeah, I'm
hour.
hosting.
Yeah.
I got a host right now.
Yeah, but what's your output? Your all-in output, the amount of Bitcoin you make, what's it cost you to mine a Bitcoin? Not just the 7.5 cents. I mean, what
Well,
do
let's
you
just
end
put
up
it
with
this way.
as a fiat
I'll
cost
break
of
even after
Bitcoin?
about a year of mining.
With what kind of capital
If we
costs?
maintain, 90, 95, if we go back in that range.
Well, he's hosting, Gary, so
Yeah.
minimal capital
I'm
outlay.
in,
How many units do you have?
yeah.
Well, you got some capital costs and you got some operating
Well, I don't want to
expenses.
give you all my numbers. I'm just going to tell you that I break even in about a year.
Whoa.
Hey,
Okay.
he's accumulating, man. That's all that matters. Even if you're accumulating
Yeah.
at a
Hey, listen,
loss
I
right now, it
totally
doesn't
agree.
matter.
Yeah, but I just want to know what, like, I'm interested in. Hey, what can I self mine for? And I don't know
Depends what
what
you want
that
to do,
math
Gary.
is.
If you want to put up 18 to 21 million, you can mine Bitcoin for 29,000. That's where we're at right now. But it's about 18 million per operation.
I'm also currently building a
Bro, I talk
Bitcoin
about that
boiler
fucking trade all day long, Eric. If you can
to
really show
heat
me
my
that math.
water in my house.
I'll give you a call this week.
For sure, dude.
Yeah, no, and Bad Dog's right. We were talking about that early on. The mining right now is a great opportunity because of the weather. So you got to shut them down when the weather's like this. That's why we saw this dramatic drop in hash rate. But I haven't checked the hash rate while we've been on this space. But apparently it went from
Now, let me
690 to
ask you a
900.
question on that. And y'all are going to probably laugh at me, but when I see the hash rate decline like that overnight, that tells me there's going to be less Bitcoin. The like to me, the price of Bitcoin should go up.
No,
Am I really wrong about this?
no, just the miners that aren't offline are making more Bitcoin while the other miners aren't. And the
Well,
difficulty
okay.
adjustment will
Correct.
kick in.
That. Yeah, yeah. See, it's funny how we all see things very similar, but we kind of look at it through very different lens. I think it's the same thing.
And that's the goal of these. It should be the goal of these spaces is to be able to
Yeah.
get those different lenses, put them together, and go, this is the reality, instead of trying to convince people that your lens is right all the time when it's speculative.
The other thing,
But yeah,
hey, Eric,
the reality. Hold on a second. The reality, Gary, with this recent drop is it's a combination of two things: was a difficulty adjustment down, and the weather storm coming in. So a lot of operations shut down. But the rebound of 300 exahash in 24 hours is spectacular to view.
yeah.
It's amazing to watch.
The other
Now,
Go
thing
ahead,
that
Bad
now,
Dog.
now,
I
it's
like,
the difficult. Excuse me, sir. 1 second. The difficulty level should go down now, right? Because they're going to want to attract more miners. Is that correct, or isn't that what you would
Yeah,
expect?
go ahead, Bad Dog. Go ahead. TC's coming up. He'll walk you through it.
well, I want to just go on this other aspect of when we shut down for weather reasons, is that we're giving everyone more of a positive outlook on Bitcoin because we're doing grid balancing. We're actually able to help the grid in bad times.
Or are you getting paid for that, sir?
The certain contracts do, I believe. not as a hosted
Yeah, but like
miner.
when okay,
Yeah,
so you
the host won't
voluntarily
pay
shut
that.
down? Are you suggesting you voluntarily shut down?
Not me, but they
Okay.
have agreements with
There's a
Yeah.
thing you need to
providers.
know about called curtailed
Yeah.
energy. Okay.
I
So there's
got
a ton of
guys.
people that agree
I
to have curtailed
yeah.
energy, Gary. And
So,
what that
but
means is
sir,
that they're
sir, I
during
spent
peak hours, they're not consuming energy.
yeah,
They switch off
but
like almost on a daily
let's
basis
be
during the
clear.
week
The
for a
electric
particular window of
utility.
time. And then they get the other times that are off peak to get really cheap energy. And that's a deal that a lot of people take because energy is so expensive otherwise.
Yeah, I also host with a hosting company. I'm just curious for Bid Dogs or whatever. Where I don't see them up on the stage. Oh yeah, Bad Dogs. And I heard you mention another space. You got a bunch of S21 XPs, which I also have a kilowatt hour that I host with different hosting companies, roughly 7.5 as well, up to 8.5 roughish. But there's no way to get return on investment within 1 year. So I'm wondering if you are getting these miners for free because S21XP costs roughly $5,000, and there's no way you're going to make $5,000 back in
I
one
got them
year.
at 4,500, but also depends on your pool. We estimated too that if Bitcoin price goes up, that would be it.
Yeah, if it goes up, but at this price,
I
you're not
don't
making
see
it
it
back in one
staying
year.
this low for
Plus
another
paying the
year.
electric rates, because S21 XP, you're roughly at the 7.5 kilowatts, you're roughly paying around $6 a day for that, and you only profit in
What
roughly
pool
$3
are you
to
using?
$4 a day. Well, the pool I use Luxor, I use Brains, and I also have them on Bitmain stock as well. All three of them.
Yeah, Gary, you had some questions there as well for TC. I know you guys were both talking over each other. I heard TC because he's very
Terrence, does that
loud.
sound right to you, man? I don't know if it sounds. Terrence, are you still
Look,
there,
look,
Yeah.
the
buddy? Okay.
difficulty in even thinking about mining, and this is the thing that's counterintuitive for most people who haven't mined and they try to like kind of process all these moving parts. It's such a tendency to communicate about this as if miners are a like unilateral like group of people. And the truth is, it's so confusing because it's so distributed and everyone has a completely different economic equation around their own mining operation. And the truth of the matter is that in various conditions, it's typically good for some while it's bad for others. So at the moment, you've got some people that because of the economics, because Bitcoin's below 90K, they're losing money. It costs them 90K or 100K to mine a Bitcoin, and they're operating at a loss. And for them, the incentive is to turn their machines off. You want to know why the hash rate's going down? I promise you, some of it is uneconomically unprofitable miners out there that need to shut off because they don't want to spend more than it costs them to just buy on the market. And then you've got other things like weather that impacts certain regions. And so the whole system is just completely dynamic. And what you see over history, especially you look at that hash rate chart, you can clearly pick out the points where the hash rate has plummeted. Good example is during 2020 when China banned mining. Or was that 21? Either way, you can see it on the chart. It's like
21,
a
yeah.
clear 50% drop in the hash rate. And you had basically a large exodus off the network from a particular region. And that was just like a boon for whoever was still plugged in elsewhere in the world. And so you have to think of it almost like a balloon where when you squeeze one part, it expands another part. It's just this dynamic system. You've got a ton of different participants. Everyone's on a different place in the spectrum in terms of profitability. That's what drives the activity. That's what keeps the hash rate going up or going down. And the price impacts people on that economic level of what is their cost to mine.
Yeah, TC is 100% correct. It is so disparate as a network. I've talked to guys who are still somehow in business at 11 cents per kilowatt hour. I've talked to other guys who are at 2 cents per kilowatt hour. Ancillary activities getting them down below in the negatives because they're making like I make additional capital by selling CO2, which drives me down. But there's no way you can judge the mining network as a whole because I would say a grand majority of miners are private organizations, so you have no public record. So it's really kind of interesting when you see Like the FUDsters love when publicly traded, power purchase agreement, big, large scale miners, when they announce their price per Bitcoin and the whole world goes, everyone's paying the same price. It's ridiculous. There's some guys that I'm talking to that are mining at, their cost to mine is around 90, 91, and then I'm around 29. I've met a guy who verified to me that he's at 18 and a half because he has ancillary activity. So when you have that big of a spread in a market, you can't judge the market as a whole. You really have to understand where the nuances lie and how different these operations can be. And the hosting space by itself, 7.5, 7 is pretty standard for hosting. It's a lot less capital outlay. And when you're looking at guys who are hosting in general, everyone has a business model and they're like, I have a break-even point, but that break-even point is based on the projected trajectory of the actual price of Bitcoin. So that
Eric,
could be
7 cents is going to be not profitable for a lot of people.
Absolutely.
Like that's kind of the tipping point. Like if you're higher than 5 cents, I would say you're probably right around like break even or losing money at this price.
Well, it
Rate.
all depends how the jewels, right? And it all
Yeah.
depends on the, and it all
Hey, we've got a couple
depends
of
on the
hands up
price.
too, Eric. We have another Eric with his hand up, and Mike's had his hand up for a while as well. I don't know if, and then I noticed Robert's been hanging out in here too, so we'll kick it back. I was trying to fool you guys and talk through. One of my Bitcoin bros from my local meetup is here, so I was talking through his account just to screw with you guys.
No, is that pursuing?
Oh, no wonder. I was like, who is this monkey?
Yeah,
Orange,
no,
he's up two spots.
The last thing the world needs is two Laurens. So I'm glad that this is actually somebody else.
We also have Brahm up here, you guys. So
yeah, we got.
He's rarely here.
Yeah,
so.
let's turn over the mic here. Let's get Eric, Robert, and then Brahm.
Yo, I picked the wrong day to stop sniffing glue because we got an all-star lineup. But I mean, thank you guys. This is right where I'm at. So, retired Navy vet, got the income, just been nerding out just like our homie Brian Romalade, or the guy looking at all this AI, linked up Claude and Grok with a little Gemini help, drafted a veteran-owned Bitcoin mining company out of my backyard. So looking at a tough shed, also got a private contractor buddy, and we'll nerd out over the next couple months, but not really worried about, I know I'm a rookie, but it's all about accumulation. And and what Gary's been harping on is like mass adoption. I told you guys before, I work in high school, try to orange pill as many youngsters. They are eager. I have parents and everybody that are boomers. They can't even invest and don't even understand investing. When it talks to orange pilling, it ultimately comes down to one word: invest. Have somebody put $5 on something, show them line go up, line go down, and show them when the line goes down and what causes line go down. Then you understand how the world is being manipulated and played by everybody else around us, and why Bitcoin's important. And it's more important to become a part of the network. Run your full node, running your own mining, and then really setting up, like you guys have been saying on the spaces, is being a part of the network and the infrastructure going forward. When everybody else is going to be slaved into us, where universal basic income or whatever happens when this tech window closes and nobody sees the opportunity to learn about this, which I got to give props to everybody. When I was in the Navy, I tried to help a young man become an officer. And one of my chiefs said, hey, man, don't help him. If he wants to become an officer, he'll figure it out himself. And that means you got to seek out the wisdom, knowledge, and instruction. Same with this platform, because everybody's got different takes. You have to be engaged. And I'm telling you guys have taken us so much further within a year by doing the research. My only thing is, ultimately, we need a visual for the general public. And I was giving shit to Uncle Scrooge, which I love, man. But I mean, there's a lot of prime opportunities to show mentorship, or take somebody through the journey if they're willing to, and show the ropes, and then produce that to the world. Because a lot of people, they just hear Bitcoin, they think it's magical. They don't know anything about nodes. You can show them Notebook LM and all the different infographics, but they got to get hands on. And it comes down to, ultimately, we got to get people financially free. We got to teach them, to consolidate their debt. And those are the closest ones near you. Not all of us on the public spaces doing, posts every day. It's your loved ones. And then ultimately we can help them climb out the hole. But understand this: if this is the way that we're all playing the game, we're going to be the ones helping a lot of people out in the future. So I think the number one goal for all of us is securing our family. And G Money, I got a little plug to you. Since we all pay taxes, And yeah, we're funding everybody. On the IRS website, it says a minimum payment of $100 a month. And everybody can log in the payment plan. Wouldn't that do some major damage if everybody said, fuck it, we're just gonna put in $100?
Absolutely. I think there's multiple ways to fight them. One is going to your employer and filing exempt so you don't pay any federal taxes out of your recent paychecks. And the second one is just stop filing. Like, honestly, it's the oldest, truth in the documents in the, Declaration of Independence. Power of government comes from consent of the governed. And if we are voluntarily complying with their demands, because let's be honest, the biggest relationship an individual has with the federal government is the federal taxes. That's it, right? I don't see the federal government in any other capacity. Then we strip them of their power by simply just opting out, right? And that's really what this is about, because we're not going to rein in the power. We're not going to, get budget cuts and vote somebody new in to try to rein in the corruption. Like we've well past that, right? Like you're not going to incrementally fix a system that is fundamentally broken, because we live in a proof of stake shitcoin democracy. And it's funny how Bitcoiners think, oh, we fix the money, like we just go back to voting and, being super gay. Like that's not how this is going to work. Like this is changing fundamentally everything, and Bitcoin is the weapon that helps transition us to change everything else. So we're just at the beginning of this, and that's why this is exciting, because we get to create that new world that's going to be full of
Hey,
freedom and
G Money,
sovereignty.
is this what you're speaking about? I saw that the Bitcoin conference, the one in Las Vegas at the end of April, just announced all the speakers. I saw TC there, but I saw you there. So I'm guessing
I saw you there, Terrence, and it had like a weird title for you.
uh,
What did it
vote.
say? Voting accident mitigator or
Yeah, I
something?
didn't know what to put there. It's like I don't have a title. But anyways, is this what your talk is going to be about?
So last year I did a talk specifically on Bitcoin as Digital 1776. This year it's going to be about Bitcoin strengthening constitutional freedoms. So there will be a little bit of the individual weaponized against the state, right? Because nobody's just going to hand you your freedom, right? Freedom is taken; it's not handed to you. And finally, we can start taking some of those back. So yeah, it's going to be a good panel. I don't know what date or anything it'll be yet, but I'll keep you guys posted. How about yours? Do you have your topic yet?
I pitched them 5 different ideas and they tended to like them all. So I don't know if they're supposed to select or I do. I don't know how it works yet. I guess but they have so many different stages, like a culture stage and whatnot. And so I think it's depending on what they want to fill. So I don't know. I think I'm going to probably be in the closet somewhere with 3 people listening. So
You can count on 4, dude.
Hey,
I'll
I'm
be
looking
there.
forward to yours, Todd.
You guys stop talking on panels, then I actually have to go into the conference, and I don't want to do that. It's like hanging out with people and doing deals in the back. Let's get over to Eric. Well, Eric bounced. Eric, you guys talk so much, you scared Eric away. That's one less Eric in the room, and I don't like that. Behind that, we had Brom and then Robert. Brom, what's going on, my friend?
Yeah, what's good, guys? Yeah, it's 7 p.m. something here, so I was about to wrap up, and then I saw this space going on, and I was like, yeah, I need to join. I just I fell into Gary's question about mining, and I haven't really followed what you guys have been discussing, so not really sure.
Neither
what
have
the
we,
topic
Brom. We don't know what we're
of
discussing either.
today
So.
is. Yeah, I just realized again today we're so early. And that's just kind of my theme for the last weeks. It's just we're so incredibly early, and Bitcoin is so profound. And
hey, Brom, when's your book coming out? Your book for your Bitcoin for Millennials book.
I have about 40, 50 people now reading it, and I'm slowly getting some feedback rolling in. So that's really nice. So I actually hope to wrap it up. Well, let's say in a Q2 max, but yeah, it's taking some time, but it's really nice to have it in the hands of people and have them send feedback and see how it resonates. So
Yeah, and I apologize. I got the Google link. I started reading, and then when I saw that you had like 50 plebs all plowing through the book, I was like, okay, I am quite busy with other stuff. He's well covered. So, but I do look
No,
forward
it's
to reading
really
it.
cool. Yeah, thank you. Yeah, it's really cool to see actually how I think it's what I don't know, I forgot his name, guy that just spoke also said, like, people are just helping each other out in Bitcoin, and I think it's just really It's really cool, and it's also a great way to like connect with more people. You know, if you start doing something in Bitcoin or creating content or whatever and sharing about what you're doing, it's just an amazing way to connect with more people. So I'm super grateful for that. Yeah.
Very cool. Robert, what's going on, my friend? Good to have you up here. We need some autism.
guys.
We need more autism in this chat right now. It's way too emotional and philosophical, dude. Let's break it down.
Yeah, well, the dollar is breaking to a 4-year low. So that's cool. Bitcoin should be ripping, but it's not. It's actually trading in line with the dollar index. So that's kind of like an interesting. The market clearly sees Bitcoin as part of the dollar complex, which is like hilarious to me, just because, right? Like that, it's the opposite of what we want, what we think, and I would argue what it objectively is. So, I guess there's a arbitrage opportunity where you could, exploit that. But yeah, for now, it's trading as as part of the dollar complex, and the dollar complex is not doing great. It's not just dollar yen, dollar pound broke, and euros got the most call skew going back to 2020. What else? Dollar yuan is breaking to like a 3.5-year low. So
Robert,
yeah, it's pretty wild.
Can you explain what happened Friday with the Fed doing the rate checks and intervening? Ostensibly, at least my read was they were helping the Japanese bond market. Can you explain what happened there and deconstruct it for us a little bit?
Yeah, so Thursday evening, Bank of Japan had their interest rate decision, and they should have hiked rates. They had, last month inflation was 3%. The long end of their bond market melted down just a couple days ago, and you've had a weakening currency. So they should have hiked rates, but they didn't. And because they didn't, that was seen as dovish and negative for the currency. So yen weakened off the back of that. And then, like, kind of in the middle of the night, Thursday night, so midnight-ish for us in the US, you just saw a gnarly, like, 1% move in 5 minutes on yen strength, right, overnight on Thursday. That was likely the Bank of Japan conducting a rate check. So what a rate check is where you're, imagine you're sitting on an FX desk at a major bank, and you get a call from the central bank, and that central bank has $1.3 trillion worth of ammunition, and they ask you for a quote on some outrageous amount of yen, right, to go short dollar yen, so selling the dollar to buy the yen. The first thing you're going to do is like put them on hold, scream to the rest of the trading floor, hey, Bank of Japan is on the line, they're about to intervene, go long the yen. Buy. And then, of course, that rumor not only spreads, your trading floor, but, these Wall Street guys, they all talk to one another. So the rumor starts to go to other hedge funds, other banks, right? Basically, you're getting the market to do the work for you. You're threatening and you're telegraphing that you're prepared and willing and thinking about doing an actual intervention. But you don't actually have to intervene. You don't actually have to sell any U.S. treasuries or sell any dollars to buy yen. You just kind of threaten it, and you just make it this implicit threat to get the market to do the work for you. So that was Thursday night. We saw 1% strength in 5 minutes of the yen. That was likely a Bank of Japan rate check. Then Friday morning, I think it would have been like 9 a.m. Pacific on Friday, you saw the Fed do the same thing, same exact thing, but the Fed did it here in the U.S. During kind of normal U.S. trading hours. And that's highly unusual. The Fed doesn't conduct rate checks on the dollar like that. A lot of people, it might feel counterintuitive. Why is the Fed weakening the dollar? Seems kind of the opposite of what their mandate would be. It's actually the U.S. Treasury Department that sets dollar policy. It's not the Fed. The Fed does set monetary policy, but it's kind of a separate thing. When it comes to currency policy, that's done by the U.S. Treasury Department and Scott Bessent. So this is why I made such a big deal about the Treasury Secretary and made such a big deal about Scott Bessent back, a year ago or whatever, was because they're the one that really matters, in my opinion, when it comes to the dollar, what's going to happen there. So the U.S. Treasury Department, Scott Bessent, right, calls up the Fed and says, hey, please conduct a rate check on dollar yen, so and so, and they have the exchange stabilization fund that they can use to engage in currency manipulation. Basically, the ESF is kind of this fund, this kind of slush fund for the Treasury Department to engage in currency operation, currency manipulation, trading in the currency market. This is where, the Argentine pesos probably came out of. I haven't checked, but my guess is that whole kind of purchase of the peso was done via the ESF. It's kind of the explicit goal of the ESF, but it doesn't sound like the Fed actually actually intervened. It just sounds like the Treasury told the Fed, hey, please conduct a rate check, as a threat that the Fed might intervene in. But you're right that the Fed is basically backing up the Bank of Japan. You have the two of them coming out basically like, we're both trying to dump the dollar versus the yen as much as we can. To have the two of them aligned in that sort of way is pretty wild.
So let's, like, canary in the mine. Like, we were at 159 and change on the US yen exchange rate. Now we're just below 153 in 2 or 3 days. That seems like quite a bit. We have the Japanese snap elections on February 8th. It seems like these things are a little connected. How should we interpret U.S. Japan exchange rate at 152 and change? What if it goes below 150? What if it goes back up to 159 on its way to 160? How should we be looking at that in the scheme of things? Because it does affect capital flows in the market and translates out to Bitcoin and other risk assets.
Oh, for sure. Japan is like a major driver of liquidity. And they had it's really important. The price of money is the interest rate, right? When you're talking, money has a price, and the price is the interest rate on that money. So when you're Japan and you had negative interest rates, you're basically saying that the yen is free. It's more than free, right? You're actually paid to take on yen. I mean, it's kind of wild when you think about it. So the yen was free. Well, obviously, that came at a cost, which was a weakening of the currency relative to things like the dollar. So that's the yen carry trade, right? People borrow in yen because it was free. You're basically incentivized to borrow it, but then you're also incentivized not to hold it because the currency is weakening because it's free. So it's like this kind of weird thing. It kind of doesn't make like logical sense, especially to us, but that's how it worked. And so a lot of that money flowed into U.S. treasuries. It flowed into U.S. equities, right? You borrow in yen, you're paid basically to borrow in yen. Then you sell that right away because you don't want to hold a weakening currency, a melting ice cube. You sell the yen to buy the dollar, then you buy, Mag 7, US treasuries, whatever. So it was this huge, like, marginal liquidity driver for US treasuries, for US equities. Once they started to hike rates and kind of stop yield curve control, basically, kind of taper the purchases of their own bonds. Once that started to happen and there was actually a price on the yen, there was actually an interest rate, a cost to the yen, it started to remove that liquidity engine. And not only that, but you also have the repatriation risk, which, like, I've been talking about for, I don't know, 5 months now. Michael Burry just put out a post about it that I would recommend. He's on the right track with that. You have this repatriation risk where Japan is a massive creditor and has been for like 40 years. They run this huge current account surplus. So they are a creditor. They are buying financial assets from the rest of the world. The vast majority of those are in the US. And so what could happen, and again, that makes sense, right? Because if you're in Japan, if you're a life insurance or pension fund in Japan, you can't buy JGBs to match your long-term liabilities to your long-term assets. You can't buy a 20, 30-year JGB because it's yielding, 20 basis points or something ridiculous. So you had to go into the U.S. And so, yeah, there's a risk. I don't know when it would happen, but there is a risk that eventually that money is going to leave U.S. Treasuries, right? So increase in yield here in the U.S., then a weaker dollar as the dollar weakens versus the yen as they're exiting, right? Because if you're in Japan and you have a U.S. Treasury as a pension, you're a pension fund, you sell the U.S. Treasury, puts upward pressure on the rate, then you're left with dollars, but you're trying to get back home. You're trying to get back into JGBs. So then you have to sell the dollar to buy the yen. So this puts downward pressure on dollar yen. Then you buy the JGB, and this meltdown in their rates eventually stabilizes, right? There is eventually a point in time where the 30-year JGB yield will stabilize. It's just a question of where.
So there's this zero interest rates that have dominated the years past, created a capital tide that flew out of Japan into Western assets. And that tide has shifted and reversed. And now it's a question of how much of it is left to continue to move and what's the impact here. And I guess what I'm trying to get at is, what do you think this February 8th snap election is going to do to that capital tide, and how do you think we should be looking at it from a Western investment thesis?
Yeah, the election that was kind of part of when the long end started to melt down. Was the prime minister, populist prime minister, talked about cutting sales tax, but also dissolving the lower house, their version, I guess, of the House of Representatives here in the U.S., and then calling a snap election. So that was kind of like last week, I think early last week. That caused a bunch of turmoil in their bond market and all that. I'm not sure. Like, I'm not a Japanese political expert, so I'm not sure. The one thing I would say is that I think that not just in Japan, but here, obviously in the U.S. and eventually, I think in Europe, you're seeing a wave of populism. And the pendulum is swinging away from these globalist, lizard creature fucks, that raped our country, and into a much more kind of nationalist, protectionist sort of view. And I think it's Eric. There's kind of a saying that nationalism in one country leads to nationalism everywhere. And so I think that we're kind of like seeing a long, 50, 60-year globalist cycle. The cycle was increasing globalization for 50, 60 years. I think that what you'll probably see in that election, we've already seen it with the prime minister, right? She was not expected to win, like, at all. The market had odds, I think, at like 5% of her winning prime minister. So it was a huge upset. That's why the yen melted down so hard, was the market hadn't priced it in. So I think that that's an indicator, that's a signpost of where Japan is, the direction Japan is likely kind of headed in. And I don't blame them. I don't blame the U.S. for wanting more nationalistic policy. And I think that it's inflationary. It's it comes with consequences. It's not great for the currency, and causes international turmoil and all this kind of stuff. But I think that you're going to see that kind of trend continue. Over the next 10 years. It took 50 years to fully kind of reach peak globalization. It'll probably take a while, for it to go the other direction. But the last time we had kind of populism, like a real wave of populism in the U.S., the S&P 500 lost 92% of its value in gold terms. So you had inflation, of course. You had a monetary reordering in 1971. So I think that like all that kind of stuff ties into what we see the U.S. Treasury Secretary doing when it comes to the dollar and dollar yen, and a potential intervention by the U.S., not just the Bank of Japan. And in terms of like how much more this could go on dollar yen, the purchasing power parity the kind of fundamental fair value of a currency. One way to measure that is purchasing power parity. The IMF has the purchasing power parity of dollar yen at like 115. So there is like a significant amount more of downside that is possible in dollar yen. And, that puts at risk. I'm not saying we go to 115, but when you get a sharp reversal like this in dollar yen, that liquidity engine, people trade with leverage. And so, if you're 10x levered and you're using the yen as a funding currency, you're 10x levered and you get, a sharp reversal in dollar yen, you're short the yen. That's how you're funding your Mag 7 or your US Treasury or mortgage backs or whatever. You're short the yen, and you're short the yen with leverage. So, once it starts ripping higher, you basically create a short squeeze of the $7, $8, $9 trillion in the so-called yen carry trade. You basically like get a multi-trillion-dollar large short squeeze. The implications are pretty insane.
What is Besant worried about? Like, for him to step in on Thursday and intervene, they're worried about something. Because my thesis is we are going to see financial chaos at some point in 26, and then I think Bitcoin catches a bid. Right now, it's not catching a bid, but I think it catches a bid in that chaos. What is Besant worried about? Is he worried about that chaos? Because I think, from my perspective, Japan is really where this chaos is going to start to emerge from, because there's such a basket case in this election coming up, where this woman who won, Takaichi, I think is her name, they're favored to win the snap election. Now it's a question of the degree of the win, but I just think that we're going to see this issue come out of Japan, and it's going to affect the global markets. I mean, do you agree with that thesis, and what is Besant worried about?
Yeah, when it comes to like a yen carry trade unwind, the real risk that we saw in the summer 2024 that led to so much chaos in kind of Western markets, the real issue is like, is the market positioned, and are they? Is it priced in, right? And what does the positioning look like? Are they hedged on the currency side? Because you can do the yen carry trade, but hedge out the currency risk. And so then, if the yen rips, you're fine. You're hedged. So it really kind of depends on that. And I'm not sure, I know it came out back in the summer 2024. We saw a very, steep, sharp, brutal sell-off in risk assets here. It came out that like $7 trillion of the yen carry trade was not currency hedged, was not hedged for the currency risk. So if that's the case this time around, and you get further significant, a lot more downside in dollar yen, it could get hairy. But if you're Besant, right, what I'm trying to figure out is, if you're Besant, you don't want a financial crisis. You don't want the U.S. Treasury. You don't want long end rates to start to melt down in the U.S. You don't want a financial crisis like a yen carry trade unwind, where the S&P 500 is down 15% in 2 days or 3 days. You don't want that, in my opinion. But you do want a weaker dollar. So I think he's trying to thread a needle, because as much as they might talk about wanting a strong dollar, and Trump and Besant, nothing has changed where we want a strong. It's all bullshit. They want a weaker dollar. The dollar is still grossly overvalued. Like, even at 96, the Dixie, and by the way, we're breaking that 20-year uptrend on the Dixie. Even here at 96, the dollar is grossly overvalued. If they are serious about reindustrialization, which I think they are, and I think the actions by Besant and the tariff policy as well, I think that all indicates that they are actually serious about reindustrialization, which I think is great. I think
if the new Fed chair comes in and does what people are speculating with the lower rates, the DXY is going to come down. Now, I thought that the target that they want was to go down as low as 80. I don't know if that's still true, but I don't think you can have these macroeconomic indicators change in a vacuum. There's all kinds of consequential secondary and tertiary impacts. We go from 90, whatever it is, 97, 96 right now to 80. That's a huge drop. And it's going to move capital. We're going to see inflation rip and real interest rates will go negative. I would think assets are going to explode. The people on wages are going to suffer.
Yep.
And I think anyone relying on importation in the U.S. Are going to suffer with a weaker dollar. Obviously, the exporters and the manufacturing base wins, but that takes time to build. I mean, if I'm building factories, I was just in a meeting this morning with the pharmaceutical company who we're trying to bring in, and they have rapid expansion plans for New Jersey here, and we're trying to cut them every deal we can, and but we were out to talking to 2030 before there's a real impact. So these things take a long time, and people in this people just don't have that attention span to think, okay, I'm going to do this, and it's going to be a 4 or 5 year investment. I just think we have a powder keg right now with all this debt that's sitting out there, and we're living well beyond our means societally, and it's not just in the West. I think it's globally.
Yeah, well, the weaker dollar. Yeah, I agree. One way to get a weaker dollar is to do what I was just talking about with the yen, right? Like they made the yen free. They made the yen more than free by running negative interest rate policy. They made the yen like more cheap than free. That's what, and look at what it did to the strength of their currency relative to other currencies, right? It weakened dramatically. Like dollar yen, was up by like almost 100% over those couple of years. So I think that is one way that they're going to do it, and you have like a secondary benefit of by running negative real rates, you're devaluing the debt in real terms. Yeah, it's inflationary, and the currency suffers, but you're devaluing the debt in real terms, which is really what we need to do. We need to devalue the debt in real terms, because in real terms, the debt is not serviceable. It's not viable. Like we're not really solvent with the debt. If you value the debt at in real terms, like, especially once you count unfunded liabilities, and like once you start going down that road, it's clear that the only way the math works is if you devalue the debt in real terms. It's not just the US. And so I think what could happen is you could get into kind of a currency war, because remember that we've had a very, very overvalued currency for the past, 50 years, certainly the past 20, 30 years. We've had a grossly overvalued currency. And we have been told that it's the exorbitant privilege to have this overvalued currency. Well, look at what it's done. Look at what that exorbitant privilege has done to our country. It's been absolutely hollowed out, right? Suicide, all the stuff that I've talked about for 3 years now. No other country is going to want that, right? So like you get into a situation where the euro is up at 120. This is a level that they have said, we don't want the euro to get too strong. Euro dollar right now, 120. They have come out and explicitly said, we don't want, like 120 is our level where we don't want it any stronger than that. Because remember, stronger overvalued currency, that hurts your exporters. And, Europe is much less hollowed out than we are, especially Germany. So they don't want to hurt their exports. So they don't want a strong, Europe doesn't want a strong euro. The Swiss don't want a strong franc, right? They've already taken their short-term rates negative, trying to disincentivize capital flows into the Swiss franc. And what have we seen? We've seen the franc actually appreciate versus the dollar, even though they have negative interest rates, nominal negative interest rates at the short end. Even still, the franc has strengthened versus the dollar, going back to the strongest level in 15 years, going back to the 2011 pigs crisis. So, I think that, no one wants a strong currency, right? We were the only ones dumb enough to want an overvalued currency. So you're going to get, I think over the next couple of years, you could see currency wars where you could, no one wants to have that so-called privilege, that exorbitant privilege. No one wants it, and so I think that you're gonna get into kind of the more beggar thy neighbor sort of a world. And
Hey,
I think
Robert, let
that
me
gold
let
is
me
the
pose a question to you. Let me see if you can roll with this a little bit. If they're going to try to, if everybody all at once is going to try and devalue their currency, a la China, what happens to the neutral reserve asset in that case?
it
From a
rips.
from a global adoption perspective, if the neutral asset right now is perceived to be metals, it rips, right? So then I guess the next stage of this is when that neutral asset becomes electronic, say, maybe digital.
100%.
And
100%. This is all great for Bitcoin, but we just got to be patient. I'm willing to be patient because I see that is what we're talking about here, is a once in a generation thing. It's glacial, right? It's not going to happen, no offense to certain people, but there's all this kind of like talk about this like overnight crisis where we wake, and it's a sudden, super short-lived,
so
sudden
hang
sort.
on, roll
That's
with me
not
for a
how it.
second. So if that's going to happen, then we're obviously seeing stage one of that happening live right now. I mean, for silver to correct and then just kind of keep going should tell you something, right? Same thing with gold. And so if that's the general up and to the right on all assets, but the game, the global game is to devalue your currency, then your hedge would then begin to be that globally there is an alignment to capture either Bitcoin or some other reserve asset that is interoperable with digital dollars, and probably they would like it to be interoperable with other digital currencies, I would imagine. But more importantly, I think that they're going to be looking for like established private capital to be bought in. They're not going to go to, say, for example, another crypto because they're not going to see that established capital and they're going to require that. And then it becomes an issue of what rails are most convenient for them to control. Obviously, they're going to give up control of Bitcoin. That's the whole point. That's why it becomes a neutral asset. But then my question to you is, how do you see the stair step happening? Because right now, my vision of this is, at least in the United States, it's happening at the state level, right, through state treasury adoption. And then effectively, that will become eventually either the norm or a sizable minority of the states are going to deploy a Bitcoin treasury with some level of adoption that includes purchases. Not all of them are going to have
Yeah.
purchases, but some are going to have purchases. And so then the question kind of happens is, all right, when do you have enough of these that you have a critical mass that those states represent more than two G7 countries? Because at that point, a G7 country has to say to themselves, listen, boys, we need to play in this game because if we don't, we're not going to catch up. And so they begin, and I would imagine that this is that we'll see emerging market currencies play this game just like they dollarized. So, do you see how do you see the stair step happen?
Yeah, no, I think that eventually, gold is clearly gold is centuries old money, and gold is clearly what sovereigns are picking right now. And over the past 2 years or whatever, gold has clearly been what's benefited from this kind of reordering of the global trading system, of the global capital flows. It's been gold, but I think that like eventually Bitcoin is going to emerge because in a world where you are envisioning kind of the landscape that I described, you need something that freely floats in all currencies. And once you have that, currencies start to get revalued based on their fundamental balance of payments. And whether that's gold, whether that's Bitcoin, I
Well, I'll
think
give
that
you one more. You need something that's going to be system money that's going to be able to seamlessly integrate with digital systems like AI that are going to start charging by the kilowatt hour. And so there is no other one that really speaks thermodynamically like Bitcoin does.
Yeah, no, it's where the proof of work kind of comes in my opinion. It's where the energy link, right? A lot of our issues have come from the fact that we delinked our money from energy. The proof of work, right? Like you mentioned, sovereigns not picking other cryptos. I agree. Like, if I'm a FX manager, and I'm thinking about FX reserves for my people, for my country, I'm not going to pick some, proof of stake, Ethereum or Solana or something like that. I'm going to pick a proof of work network it's important to remember that like 1%, the Bitcoin network uses like 1% of global energy, electricity, right? Like that's crazy. That's what I'm trying to pick, right? Not Solana or something like that. So yeah, no, I think look, it could take 5 years, it could take 10 years. I think the first step is that you see kind of nation states maybe start to mine. I think that and I don't think that they're going to announce it. I think it'll be kind of covert, but I think that's the
Didn't
first
Japan
step.
announce it?
Did they? I'm
Yeah,
not sure.
Japan announced it.
Catch that.
What are you talking about? Like Japan came out and said we're going to be redirecting excess wind into Bitcoin mining.
Russia's been mining for a decade.
Yeah, Russia. Yeah, Russia.
Brazil, Bhutan. There's a lot of them. Yeah.
Yeah, but major, right? Not like El Salvador, Bhutan, but major players. I think that that's kind of the first step. I bet that China's already mining. I bet that a lot of the Gulf states in the Middle East are already mining. Europe probably not, because they're all yeah, they're Europe, so probably not over there. But I think that's the first step. Then I think you start to see you start to see Bitcoin appear in the FX reserves, and that's when it really gets going.
That sounds amazing, man.
Yeah, I agree. It does sound amazing, Eric. Hey, Eric, didn't you have to bail in like 5 minutes?
I do. Well, 15, yeah, but I wanted to
15.
shut. Yeah, I wanted to shut it down at 1, but we can keep it open until 1:15. My Zoom's at 1:15, so we'll get Eric on here. He has his hand up, and then we'll go around the horn. Great stuff, Robert. Really good stuff. Go ahead, Eric.
Good afternoon, gentlemen. So I agree with Robert that the key here is adoption by central banks for FX reserves. When Bitcoin does become part of that, that's when it starts catching up / replacing gold. So it's really a decision of the big central banks. For the price equilibrium, it's really about energy and the cost of energy. So people will come and mine more and mine less. And this is what is affecting the price, because you have adoption, which is affecting the price. Of course, people bidding to buy the existing Bitcoin from other people. But at some point, the system has to balance itself according to the price of energy. So that'll be variable for a while. And when you want to use it as a currency, the thing that you have to distinguish is store value and currency. And very often these two can be separate in today's world. And they're optimal when they're separate, rather than design a similar instrument to do both. So once upon a time, you could have gold as a currency and as a store of value. Then came the fiat to be just based on gold, but then it's much easier to transact dollars than it is to transact the gold itself. So the currency and the store of value were separated. Because and this today, in this time and age, you can have two digital instruments which have two different functions. It's very easy to do. We have the technology for it. It's all about the adoption and the standards and which one gets accepted. I see Bitcoin as the first mover, the first test. That's really what it was. And from there, we can evolve. How are the banks going to take it? They say, do we use it as a store of value, or do we use it as a first beta test currency? The shift, as I said on my space on our morning finance show a couple of days ago, will likely be first to some tether to gold. So like a gold-backed digital currency, so that a lot of people can start getting into the digital currency world. And once you are digital, then it's easy to switch from one to another. It's easy to switch to Bitcoin, to something else. You can have a bridge between different currencies, and then the world can move on into a much more digital era, if I can say it like that. But there's an on-ramp that
Prices
makes it
determine the
easy.
value of money.
Sorry?
No, go ahead, Eric. Go ahead.
Prices determine the value of money.
And so yeah, and based on energy, so energy is going to be critical for the next or long time to come, and basing your what you consider to be a store of value on energy capabilities does make some sense. You got to be careful because if you run the beauty of the Bitcoin network is that it's worldwide. It's not dependent on one country specifically. It's an advantage in that way. It will always run no matter which country goes down energetically. The backside of this is how will central bank react to that? Do they want to own it that way? What purpose they put? Because I think it will stay, but in what purpose? Yeah, how they will define it. This I'm just looking at the future. I cannot predict. I'm not, I'm not a god, and so, but I would not be. We've been very fan of Bitcoin because it was the first one. Don't attach yourselves to it as if it was only going to be the only one to the end of the universe. It's a very good beta test, but it is what it is in my mind. It's the first one, first mover. And when I look at the paper of Bitcoin, it was designed for what it was designed for.
Prices determine the value of money.
The what?
Yeah, Eric, appreciate your
Prices
take.
determine the value of money.
Appreciate your take. I'm going to go over to Dark, and then we're
Dark
going to
side.
we'll get Chris. He's been waiting patiently up here as well after that. Go ahead, Dark.
Yeah, so that's interesting, right? The thought of digital gold. But let me point out real quick that the Germans have been asking for their gold back for over a year, and they can't get it back from the United States. So the concept of a digital gold token, I think it fails as a trade measure. I understand where you're going with that
Yeah,
because
it's more like an on ramp to go to the digital world. That's how I was saying it, not to stay.
right, but if you want to talk about centralizing power in a world where people don't trust each other, then digital gold token would be the ultimate centralization tool. And how do we audit the gold? How in the world do we audit the gold? How do we audit the currency? We don't. So it's really just that's an extension on the 18th century gold receipt, where now we all of a sudden we're back to trusting the guy who runs the vault. We can't even audit Fort Knox. So I just question how that ends up working. I get it. Tom Luongo put this really well, right? Like gold is an energy token. Silver is an energy token. Bitcoin is an energy token. But there's only one of those three that can be audited. So why would nation states sign on to a plan that centralizes all of the control of the currency back into the people that just blew up the currency to begin with? We're here because fiat printing, especially in the case of, I guess we can look at the US dollar as the world reserve currency, has been printed into oblivion. We have abused our privilege as the world's reserve currency. And I can't envision a world when this blows up where everyone says, okay, let's go back and give the US government control again, but this time they're going to give us a gold token. And we're going to trade that and we'll accept that as final settlement.
Yeah, and
we can't deliver the gold that we owe a foreign nation. One of our friends, allegedly, I could argue that point.
Nor can we audit it.
Well, let's not dance around it. I mean, this is just the constant narrative war, and there's people that don't like people who are Bitcoin only or Bitcoin maximalists or whatever you want to characterize it as, who are insistent upon the fact that it's all about Bitcoin. And really, it's just an unescapable fact if you actually understand the technology. Bitcoin is the innovation. It's not blockchain. It's not about tokenization. It's Bitcoin. Bitcoin is the innovation because without the decentralization, without the hash power, proof of work, security, you don't have anything. You impact either of those aspects of a system, and you're right back to square one in terms of trusting a third party, trusting people in power who have just proven over and over again that they are going to abuse that power. So it's really comes down to how serious you are about, advancing the money system that underlies everything. It's Bitcoin. We don't have another option beyond Bitcoin because everything else that's come after it, and there's just at this point like literally tens of millions of copycats and people who've come on its coattails, and none of them have created anything that even equals what Bitcoin does, let alone try to surpass it or improve on it in any way. So it's really a fundamental, there's a wall there, and you're not going to knock it down, and you're not going to soften it. It's about Bitcoin. It's not about tokenized gold or any other scheme. You got to have that whole system. You got to have the decentralization and distribution of the system. You have to have the proof of work. Without those things, there's nothing to talk about.
Bitcoin.
And
Bitcoin.
TC,
Bitcoin.
Yeah,
TC, the I've said this a million times. When the you know what hits the fan, the only plans that get them implemented are the ones that are already on the table. We have so abused and so tried to pump life back into this dollar system. And it's like Weekend at Bernie's with this thing. I don't care about stable coins. I don't care about gold backed tokens or whatever. Those are just literally trying to keep Bernie, walking around as if he was alive. At the end of the day, these two systems are incompatible. Every time I would get a chance to talk to Jeff Booth and say, well, what about if we implemented bit bonds and then they made their way and they kind of worked their way into the system? Say, Kevin, these two systems are completely incompatible. And for a time, I didn't understand what he's talking about, and I totally believe him, and that's the case.
Yeah, and the idea of Bitcoin isn't the final destination. TC, why don't you talk a little bit about the network infrastructure and how next to impossible it is to recreate the network effects?
Yeah, I mean, it's really kind of like stark at this point. You're talking about computational power that's just not going to be equaled by anything else because the Bitcoin network continues to grow. And there isn't even anything that's like in second place that's within any kind of even comparable scale. You're talking at this point about limitations of chip production and ASIC machine production, uh, and this is why sort of the topic about 51% attacks and that kind of view of attacks on the network is a really funny one to talk about, because by the time you actually unpack it sufficiently, you really realize, okay, you're going to need a 80 to 90% attack, not a 51% attack, and you're going to have to sustain it. So literally means you have to duplicate the existing most powerful network in the world to attempt to just win a coin flip more often than not. You have to actually come up with like a 10x multiple of that network to fully wrest control of it. It's just never going to happen. So it's one of these things where you have to take a little bit of like concepts of scale of computer technology and the actual physical limitations and how much hardware can be produced. There's energy all over the planet, and this is where you see the Bitcoin network just continuing to grow, consume more energy, seek out cheaper, more efficient forms of energy. Just look at the hash rate chart for the lifetime of Bitcoin. It's the most bullish, most beautiful parabola. And that's not going to stop because you basically have all the incentive here to continue driving that growth.
That's exactly what I was wanting to hear. That's very, very well said. Chris, you've been up here, been pretty quiet. I want to get you in here before we go around the horn.
Yeah, I don't want to take too much time, man. I appreciate you. Again, just the imagery for someone that's having problems. I mean, a lot of things have been talked about, let's say the last 2 hours, right? And it can be overwhelming. Number one, that's the fiat system. If you're overwhelmed, you should be. You absolutely should be. There's a lot going on, and it's absolutely impossible to be able to keep up with everything going on in complete chaos. That's the fiat system. That's one system. Bitcoin, the protocol, is a completely different system. And I'm telling you, once your mind, whether you internalize it or you can see it, maybe you like draw it on your wall or something where you see it, it's two separate systems. Now, whenever the conversation blends them together, it can get very chaotic. It can get confusing. People will get upset with people. That's what happens when you mesh it together, good or bad. That's the truth. And then, so as an individual, you have to figure out, what system do I want to be a part of? Either one, either Bitcoin or the fiat system, or the third option. There is third option. You can do both, but if you're going to play the fiat game, which you can, it's not a. I'm not saying it's good or bad, but you better know what you're doing in the games. You better have a plan, and you better, especially if you're a deep speculator. I don't have time to get into all this, but if you're speculating hard and you know who you are, you better have an edge. And if you're just looking from a return perspective in that world, you better be able to beat Bitcoin's return. And what's happening is humans are getting out of the fiat protocol and into the Bitcoin protocol. Someone model that for me, and what the returns, air quote, with a fiat denominator is. We haven't seen it. No one can model that. I don't care what model you have or how many subscribers you have to your model. Sorry, it doesn't exist. So that's
And
what's
Chris,
really
you believe
important to
these
understand.
are mutually exclusive, right? These systems cannot peacefully coexist, correct?
100%. That's my and so that's a lot of our thesis. It's been like that for a long time. But you, as an individual, it's just so important that you identify what you need to do, and not just sit around and not make a decision. Because not making a decision is making a decision, right? And you are willingly making a decision to be in the fiat protocol completely, or you drop everything and you go to El Salvador and you're on a Bitcoin standard, or you're a little bit of both. And let's just be clear and honest. 95% on the call is probably both. All right. And then there's decision making processes in that both mindset, good or bad. So just want to throw it out there.
Gary, you came back up here. I wanted to get you included here before we go around the horn as well. You still driving? All right. Well, let's go ahead and wrap this thing up here, Lauren. Great space today. A lot of different ideas. Chris, I think that was extremely well said. It is difficult to navigate both of those two systems at the same time. And I think that's all part of the natural progression that's happening right now, right? Like it is confusing. And a Bitcoin standard is difficult to achieve, and it's going to be impossible if you're buying ETFs. Just a simple way to look at that. But let's go around the horn here and get some final goodbyes. We'll go ahead and start with old Taylor.
Hey, just fuck custody your Bitcoin and love your neighbor.
Love it. TC.
I just want to make sure people know there's actually like scintillating, exciting things happening that you can watch in Bitcoin. Right now, we're 4 days into this difficulty period, about 10 more to go, and we are averaging 12-minute blocks. There's been a shift here. There's been certainly some impact from inclement weather around all parts of the world, but in North America especially, and you're literally witnessing the impact on the network, and you can see it. And so this is kind of an interesting metric if people are interested in kind of learning a little bit more about how Bitcoin works, and they want something other than the price to stare at, since the price seems to be annoying people. Watch that average block time over the next 10 days. This is something I'm going to be watching as closely as a NFL playoff game or something. It's like, let me see if this average block time reverts to mean. We know the system wants to target 10-minute block times. So if it starts to creep closer to 10 minutes, 11 and a half, 11 minutes, 10 and a half minutes, that's going to be one thing I'm watching for. If it stays at this pace of 12-minute average blocks, we're looking at like a 16% difficulty drop coming up in 10 days. That's massive. So it's actually consequential, especially if you mine. It's a real exciting thing, because if we get a difficulty drop like that, anybody who's hashing is got a tremendously better odds of getting more sats from their activity. So that's what I'm watching. I encourage you guys to check it out. Have a great day.
Love it, TC. Love it. Prescott, you just hopped up here. I'll give you a shout here before we shut it down. I got about 2.5 minutes here.
Oh, right on. No, just reporting back in. Had a really good conversation after winning in this competition, man. I'm excited to start and look forward to keeping you guys posted on what's going on.
Appreciate it, man. Best of luck. Best of luck.
Thank you. Yeah. And your space yesterday was really great too. I hope you were able to share the link with people in here so they can listen to the recording.
Oh, I'm terrible at that stuff. I don't even share out half my podcasts. Yeah, I'll share it out though eventually.
That's really good.
Yeah, no, thank you. G Money, close us out here.
Yeah, look, the ultimate thing here is Bitcoin's all about energy, right? And the energy is scalable, and the energy available to an individual is infinite. And so when people really figure out what that means, I mean, even Grant Cardone just the other day said he just realized what hash power was. This is a guy buying billions of dollars of Bitcoin, just realized, what the hell hash power is. And it's kind of interesting because nobody understands that. The fiat price is noise and the dominance is noise because there is no other network that has any resemblance to the dominance Bitcoin has. So, yeah, keeping it real.
Love it. Chris, close us out.
Get on Noster. Check out Freedom Tech. Check out White Noise. It's better than Signal. Like, dig into this technology being built on Bitcoin and different layers and Cashew and Fedi and all these things that are being built. They're fascinating. Do some, put your time into it, and then Bitcoin will give it back to you.
Maybe next Tuesday we'll hop into that. I think it's a conversation I'm interested in learning about. I don't know enough about, but I think next Tuesday we'll make that a point. So I'd love to have you back on here, Chris. There's also something called Upscrolled that just came out. It's not a Bitcoin related thing, but a lot of new stuff coming out here. Gary, Gary's down the listener. Thomas, close us out.
Look, if you're spending time on these Bitcoin Today spaces, you obviously have a fundamental belief that we're going to end up on a Bitcoin standard at some level. I believe that, and I believe most of the people I know on here believe that as well. I think the open questions where we probably don't have full alignment and these conversations help form a more informed position is, when do we get to a Bitcoin standard, and what does that path look like? And that's where I'm focused on. And that's why I was asking Robert a lot of macro questions. It's as much as we studied, I'm confused, to be honest with you. I don't have it all figured out. I see this go here, that go there, and I try to stick it together, but I don't feel like I have a cohesive framework. And I suspect many of us are in the same position, and we're going to be surprised by some of the things we see in 2026. So I would say, look, buckle up. And if you think you're going to time the market, you're probably going to be on the short end of that stick. So if you believe in the Bitcoin standard, I would make sure you have a proper allocation. If you want to keep some powder dry for dips, that's great, but make sure that that's not a majority of your position.
Sound advice. Appreciate that, Thomas. Robert.
Yeah, not much. Just I'm excited for the difficulty to plummet because I got my whole 10 terahash pointed at CK. So yeah, that'd be cool.
Nice. Yeah, I'm excited as well. That's always a good thing for anyone who's hashing out there at all.
You do pool, Mike.
Yeah, we
pool?
we allocate. Yeah, we work in 2 different pools, and then we have some solo miners that we run too, just to gamble with. Yeah. Dark side. You there, Dark?
Yeah, I'm here. Not much to add. Crazy times. Fiat land is in absolute disarray. Dollar getting smoked against hard assets, now getting smoked against other fiat currencies. U.S. intervening in Japan. Nobody can really understand what that's all about, but I'm sure there's a story behind it. I think Chris made the point. You can't understand fiat. Nobody understands it. Not even the guys who are running it understand it. So you might as well just get off of it before it gets you off of it. Because one way or another, this is going to end poorly. Land it there, brother.
Yeah, he's not here anymore, but Chris, that was such an excellent point. I love when people come out with a different perspective. Really, really good perspective. That would be a great clip to put out there, Lauren. Why don't you close us out here as well?
What about Punch?
Oh, Puncher. I'm sorry. How can I forget him? Go ahead, Punch.
Hey,
I'm a jerk, man. My bad.
No, you're not. I thought Chris was awesome, and he's spot on. In my life, I have, I'm part of the 97% that are living in both worlds. But I see the Bitcoin world and the Bitcoin protocol pretty clearly because I have positions in Ego Death Capital and 1031, and I can see the companies that are being built on the Bitcoin protocol. And it's fascinating to me. The reason I still have legacy positions in fiat land is because I think that potentially some of the speculations I'm involved in will potentially beat the return of Bitcoin. But I wrote on my list of 10 things to do this year is to start transitioning out of fiat completely. That means gold, silver, that were the worst trades, as you know, Eric, forever and a day, into Bitcoin. My level of conviction around Bitcoin is complete. So I'm playing around in fiat land, but that, as every day goes by, it's going to be less and less of that. And I know full well that in some of the fiat speculations, I could get completely wrecked. That's okay. I understand that risk, but the only way I can buy more Bitcoin is to play around in fiat land, generate some revenue, and then convert it to Bitcoin. So that's where I am. But great space, Eric, as usual.
Appreciate it, brother. Lauren.
Yeah, thanks, buddy. Agree with Punch there. I'll just sign off on what old Taylor said. Love your neighbor. Focus on what you want. Focus on good. Try to purge all this nonsense and evil and FUD, fear, all that crap out of your life. Thank God for Bitcoin. Back to you, Eric.
Yeah, great closing here today too. Very concise. I kind of step on the same stones along the way. Life is way too short to have arguments with people, and even people you vehemently disagree with will teach you something along the way. Keep your eyes and your ears open at all times. Learn as much as you can. Apply it to your life, and always try to make your life better by being good to other people because they'll be good to you. So thank you for being here, everybody, on a Tuesday.
In 1944,
I appreciate y'all being here. We'll see you next Tuesday. We'll see you tomorrow on Bitcoin Today. Have a good one, everybody.
Few then grasped that they were enshrining the dollar as the global king. In 1971, when the U.S. depegged the dollar from gold, it was presented as a temporary fix. But that moment shattered the last connection to hard money and ushered in the fiat era we live in today. Here's the truth. No global leader alive has governed under a hard money standard. Not one.